Getting ready to get started. What do we got? What do we got? What do we got? Ooh, that's good. Who's in the house today? All right, we got actor's wife, CPA dude, Wild Liam. Good evening there, Wild Liam. It's kind of like Wild West, Wild Liam, the Wild Liam. Cool, Liam, how you doing? Mary Cook, how you doing? Maria Escalante. Ooh, like that name. Maynard, good evening. Hey, it's Woody. How's it going there, Woody? Rayar, how you doing? V. Cyril. Brian, Brian wants to take a look at Bristol Maya Squib. Let's take a gander at that one. Ooh. Well, that's not good. All right. While we're waiting for that to upload, Kellen, Mac, what's going on? Ken, it's popular hour. You can add. Okay, whatever. All right, so while we're waiting for this to load, we can chat about what's going on. I probably should have done this earlier, got it ready to go, but no, I didn't. All right, so got nobody over here. Mark's here. Hey, Mr. Mark, I'm online tonight. Imagine that, woohoo! Yay for Mr. Mark. Okay, nobody here yet and nobody there yet. Oh, my, nobody there yet. Cool beans. All right, so as we're getting ready for this thing to load, there it is right there. All right, hold on. Hold tight. Move this over a smidge. Right there. Right there. That's good. That's good. I got to change this 1 hour. What the hell is that? That's more like it. Alrighty. All right, we're just about ready to roll. Just about ready to roll. All right, so Bristol Myers Squibb's gonna be the first one we look at today. After we look at Siri, of course, because it's it's already up on the board. Why not? Hey, Rocco's in the house. Okay, different Rocco, but alrighty, that works. Main laner, Michael, Mitt, what's going on? Mystical Dimples. Where'd you come up with a name like that? That's cool. Mystical Dimples. Dusty L. Kaner. Okay. Kanoy. Phil. What's going on, Phil? Rocco. Don Hatfield. Jeff. How's it going there, Mr. Jeff? Frederick Duscht. Frederick, you got to put a different name there, buddy. You probably got picked on all along. Gary. Antone. Kalos, Groucho's in the house. Apple user. Alrighty. Stellar. Good evening there, Stellar. Sky Pixels. Hello from Cape Town. Woohoo. Lucas. That's an interesting name. We're playing Lucas. Cool. Good evening. Candace. Good evening. Cool beans, Miss Candace. Thank you. Brian bought a bunch of Friday morning. Not quite sure, Brian, what we're talking about. Let's go backwards just a little bit. Oh, Bristol Myers Squibb, BMY. Can we take a look at Bristol Myers Squibb in a second? First and foremost, let's get the introductions done and out of the way so you know who the hell you're listening to. Other than just some random guy on YouTube, TikTok, Twitter, whatever, wherever you're signing in from. Okay? My name is James. This is Dividend Stock Talk, where I show you how my 9-year-old daughter wanted to learn how to wake up. It's been a nice weekend. Had a nice couple of days off, so getting back into the groove of things. Let's see if we can try that again. All right. In 2008, don't know if all you remember back then, 2008, my 9-year-old daughter comes up to me one day, jumps on my lap and says, Daddy, what do you... See, 9 years old is perfectly acceptable, so don't get twisted. 9 years old, she said, Daddy, what are you doing? Can you teach me? So here is my 9-year-old daughter wanting to learn how to invest in stocks in the stock market when most adults don't get it. They don't quite understand how it is. So my challenge, challenge of the day for Dad, here it is. How do you teach a 9-year-old how to invest in the stock market? keeping in mind most adults don't get it. All right, so there's the challenge. It has to be simple. It's got to be safe, predictable, consistent, and no way for her to lose. Eric wants to take a look at Nucor and Boeing. Give me a couple minutes there, Eric. We'll jump on that one too. Just sit tight. So, simple, safe, predictable, consistent, and no way for her to lose. That's the criteria I had to come up with for teaching a 9-year-old. Okay, so you follow me so far? 9 years old, wants to learn how to invest in stocks. Most adults don't know how to do it, but she wants to learn. Okay, so great. How do you come up with a trading strategy specifically for a 9-year-old? Get some rules. Ready for the rules? Here they come. Rule number 1, never buy something that's not on the list. Now, for my 9-year-old, that was simple. If it's not on the list, don't even bother looking at it. Now, we do check every week, so we'll probably be checking tonight or tomorrow night. How many new stocks have they added? Because last week, there was 10,370. That's a lot. So I had to create a list specifically for her. Okay, if it's not on the list, no. That's rule 1. If it's not on the list, no. Well, for you guys, rule 1 is simple. If you don't know who they are, you don't know what they do, you don't know anything about them, you don't like them, don't buy it. It's that simple. If it's not a company you don't want to hold on to for the rest of your life, don't invest your hard-earned money into it. All right. Hold tight for a second. I'm going to read these comments here a second. So that's rule number 1. If you don't understand it, you don't want to hold on to it, don't buy it. Rule number 2, never sell at a loss. It defeats the purpose of the game. And yes, it is a game. Okay, it's an adult game with adult consequences. Unlike Monopoly, which is a kid's game, 3 greenhouses, 1 red hotel, go around, get your $200 every time you pass go. Yeah, that's Monopoly. That prepares you for investing in real estate. How about the game of life? Remember that one? That one, well, it kind of prepared you for things that happened in life. You got to buy insurance. You get to invest in the stock market. You get to buy a house. You get to get salary. You get to go to college. You get to get debt. All that kind of nice neat stuff. The game of life. Remember that one? It was actually a game back in the 60s, and the 70s and 80s. Anyway, so rule 1, never buy something you don't want to hold on to. Rule 2, never settle a loss. Rule 3, make sure the company is consistently profitable. This one boggles my mind because when I say consistently profitable, what I'm talking about is going into the data stream where all the data is. Because, that's where we store important information. You got the date, you got the high, the open, the low, the close, the volume, all that kind of nice, neat stuff. It also has recorded every single dividend the company ever paid out. Now, what is a dividend? Well, after all, this is Dividend Stock Talk. Okay? That's the name of the show, Dividend Stock Talk. We're going to talk about dividend stocks, specifically those that are consistently profitable for at least 2 decades. Well, those are the ones I like. Why would I want to invest my money into a company that's not consistently profitable? Now, if you didn't know, a dividend traditionally is a portion of the company's profits that they give to the investors. That's us. We buy the stock, we become an investor. We become part owner in that company. So we are entitled to a portion of the profits. Now, basically, there are 2 different types of companies. There's your dividend companies that pay a dividend, share the profits for cash flow. Okay. And then there are growth stock companies. They take all their profits, throw it back into the company for accelerated stock, for the price to go up higher. Okay? They put it back into the company for capitalized growth. So you can see your account grow bigger and bigger and bigger. It doesn't help any when you're trying to pay the bills on a weekly basis or a monthly basis, because a growth stock, you put your money in there and you just sit. It's kind of like a dust collector. You buy it and you just sit and watch. That's it. Just watch and wait and wait and wait until you decide it's time for you to sell. Well, unfortunately, I'm not in that position at this point in my life. This point in my life, I'm retired, so my money's got to come in from somewhere. So I take all the money that I've earned in my working days, which I'm sure some of you are doing that now. You know, $5 here, $10 there, 100 there, 500 there, whatever. You put into your IRA, you put into your 401k, you put into something, you put it somewhere for a rainy day. Well, guess what? At 61, it's raining. The funny thing is, it was actually raining today. And I left the windows down in the car, and it's like, oh man. So I got puddles in my seats. Anyway, simple, safe, predictable, consistent, no way to lose. Rule 1, Rule 2, Rule 3. Okay, so Rule 3, make sure the company's consistently profitable. We're going to go through the night. You guys are going to suggest stocks. I'm going to take a look at them. Granted, it's almost guaranteed that someone's going to come up with something that I'm going to think, what the hell were you thinking putting your money into this? But you know what? You can put your money anywhere you want. That's the beauty of living in America. You can do whatever you want. Fine, you do it. Don't expect me to agree with you, because I have a specific long weekend. I have a specific goal. My goal is pretty simple. I want consistency of cash flow. That means I want money coming in every week. Okay? And I want the preservation of my capital. Basically, the only thing that means is I don't want to lose. Because if I lose, and I lose enough, that means I have to go back to work and punch that stupid time clock. I would prefer really not to have to do that. I really would. That being said, Rule 4, weekly options only. Please, if you're going to invest in a stock, you should at least know. Blaze Conti wants to take a look at Pepsi. Ooh, why not? It's a dividend king. Nice. Rule 4, weekly options only. So as I was saying, consistency of cash flow and weekly. What was it? See, getting older is not as great as they make it sound. Okay, so consistency of cash flow, weekly. Consistency of cash flow and preservation of my capital. Yeah, I already did that. Okay, so I don't want to have to go back to work. I could if I wanted to, because I'm young enough, and I still. Well, I feel young. I was out this morning playing soccer with the guys. The funniest thing, I get this guy he's breathing heavy, he's huffing and puffing. He says, "Oh man, I'm so tired." I said, "Shit, man, I don't want to hear your crap. How old are you?" 44 years old. I'm going to be 62. He's 44, and he's complaining that he's getting tired from running around. It's like, come on, dude, I'm 60. I'm going to be 62, and I'm running around. You can do the same. You don't hear me bitching. I wish I was 44 again. I do. 44. I had a fun time at 44. I did. Anyway, besides the point. Now this is the weird thing. Mark says, I hope somebody asks about SPY. I enjoy your analysis explanation. I pick up something each time. I learn by repetition. All right, I'm going to look at SPY just for you. Okay, just for you. I'm going to look at SPY and tell you exactly why I don't like it. Because you know I don't like it, and you're just doing that because you want to hear me saying how much I don't like it. But we'll get there. All right, so rule number 5, make sure all the numbers work. So that's pretty simple, okay? 5 criteria, 5 rules. Simple, safe, predictable, consistent, no way for my 9-year-old daughter to lose. That's for my 9-year-old daughter. For you, it's simple, safe, predictable, consistent, and 1% per week. That's for me. Me and you. Okay, 1% a week. That's what I'm looking for. 1%. Come on, 1%'s not that much. It shouldn't be that difficult. 5 rules. Number 1, never buy something you don't want to hold on to long term. Number 2, never sell at a loss. It defeats the purpose of the game. And yes, it is a game. Rule 3, Rule 3, make sure the company's consistently profitable. For me, it's 20 years of consistent increased dividends, because the dividend comes back to us as investors as a portion of the company's profits. So if the company's profitable, I get a dividend, and the dividend increases every year. That's what I'm looking for. Rule 4, weekly options only, because I want to get a paycheck every week. That's weird, right? I was born in the 60s, grew up in the 70s and 80s. When we went to work 8 a.m. Monday morning. Okay, at 4:30 Friday, we were done with work. Well, why should it be any different now? Stock market opens up at 9:30. I jump on at 9 because I want to see what happens. Okay, I'm off by 10. Okay, I jump on at 9. We take a look at the 3 accounts that I'm trading. Because I trade 7 accounts. 7. 7. I trade 7 accounts. I share 3 of them publicly so you can actually see exactly what I'm trading in 3 accounts. Okay, so we look at those, and then we do what trades are coming up for today, because tomorrow's like a big day. Because I do most of my trading, like 80 to 95% of all my trading is done on a Monday morning. Because if you're new here, everything's going to make sense as the night progresses. But for those of you who've been here before, you know that Monday morning, okay, night, well, something just started. Monday morning, Monday morning, 9:30 is the new starting date. Well, it's not the new, it's 9:30. That's just, the new week. That's what I was going to say. The new week begins at 9:30 on Monday morning. It ends at 3:59 p.m. on Friday. It actually closes at 4, but when it says 9:59, you got like 1 minute to get a trade in, because at 4, it's done. Okay? That's the maximum amount of time value, and that's exactly what we're doing. We are selling time. We can't buy time, but we can sell it. It means I'm going to buy something, and I'm going to sell it for the exact same price or close to the exact same price I just paid for it. Now, that sounds kind of weird, doesn't it? Well, let's take a look at this just for a second, for an example. Okay, the current price on this is $22.70. That's the current price at this moment. So when the market opens tomorrow, I'm going to buy it at $22.70, and then I'm going to sell the closest full strike price I can possibly get to that price. And what is that? I'm going to change that. Okay. $22.70, the closest one's going to be $22.50, and it's paying 51 cents. Now, let me explain that just briefly. So if I'm buying it at the current price, $22.70, and then I'm going to sell it for as close as I possibly can, because it allows you a covered call, which there's hundreds of videos on covered calls online. It's simple. You buy a stock, you sell the stock, a certain price by a certain date. It's called covered call. It's simple. If you have any difficulties, there are literally hundreds of videos to explain it. But basically, simplistically speaking, I'm going to buy it first thing tomorrow morning at the current price, $22.70. I'm going to turn around and I'm going to sell it for almost the exact same price that I just paid for it. Now, you might think that's not a wise idea, but here's the thing. I'm not interested in the stock itself. And that sounds kind of weird, doesn't it? What I'm interested in, are you ready for this? I'm interested in the insurance policy that goes with it. Let me explain. Okay, it might be a little difficult to understand this because it's usually not explained in this manner. A covered call is one of the simplest, safest, most predictable trading strategies there is. It's kind of like playing blackjack. When you play blackjack, you actually have an upper hand because, there's certain rules that you can and cannot do. Well, there's certain things that the dealer can and cannot do. Okay, most of the other gambling things you don't have very much control over, but blackjack you kind of do. Well, here we kind of have the same thing. So if I'm buying it at $22.70 and the closest strike price, okay, this is what I can sell it for, is $22.50. Okay, yeah, I'm losing 20 cents right off the top, but the insurance premium, the insurance policy, let me explain it. The insurance premium is 51 cents a share. So if I take the 20 cents off of that 51, I'm walking away with 31 cents. Well, that doesn't sound like a lot, but here's the thing. 31 cents on a $22.70 stock. That's more than 1%. So I'm looking for 1%. Okay, and that's the 1%. Okay, $22.70, $22.50, 51 cents. I could go with the 23s and pick up 26 cents. That's still over 1%. And there's a difference between this and this, which is an extra 30 cents. Okay, fine. But I want safety. Okay, the 22.50 is safer. The 23 is more profitable. I'm looking for safety. Okay, that's where I am in my point in my life. So the thing is, this premium right here is more than 1%. Now, it's not 51 cents. It's 51 cents per share. So every share that I buy, 100, 500, 5,000, 10,000, 25,000, however much that is, it's multiplied by that number. That's how much I walk away with. That's what I'm looking for. So if you break it down, I'm looking for companies that are consistently profitable. that is the right time to buy. And we're going to go over the chart in a little bit to show you exactly what I'm looking for. So that when you look at it, you say, wait a second, that either makes sense or it doesn't make sense. So out of everything you're going to get out of it tonight, there's one question I want you to come away with. Your takeaway. Well, I spent all this time listening to this guy. What answers am I looking for? Well, the one answer, the big one, should be question number one. Does it make sense? That's all. Does it make sense? And as we progress, kind of like a good movie, everything's going to come together at the end, and it should make sense. It either does or it doesn't, one or the other. So here's the thing. If you're looking for capital growth, if you're looking to buy a stock, have it shoot through the moon and be able to retire tomorrow or the next week, you're in the wrong place. I am 61 years old. I'm retired. My income comes from me trading whatever money I have and getting a simple, safe, predictable 1% every week. That allows me to pay my bills. And then some, but that's not the point. But that's what I'm looking for. Now, 1% a week is over a 50% return. Now, what I said, I really could care less about the stock price. I really don't. I really don't care about the price. But I do care of where the stock price is moving at the moment. So you'll see that as we progress, all right? So the first one we're going to look at is going to be Siri. Then the next one we're going to look at will be Bristol Myers Squibb by Brian, because Brian wanted to take a look at it, and Brian told me that he bought a bunch on Friday morning. Okay, we'll take a gander at it, and we will see what it looks like. And then, I believe is it Eric over here? Who is it? Mark. Yeah, Eric wants to take a look at Nucor and Boeing, and then Mark likes to get entertained about my philosophy on SPY. Well, we're going to go over that one also. So those five we're going to look at real quick, and then we're going to progress to whatever else you guys have. But do me a huge favor, okay? Alex, UNG, I have no idea who that is. I'm going to pause it right here. We'll take a look at UNG in a little bit. But I have never heard of them, so I don't know what to tell you. So that being said, let's get the ball rolling. Let's see how it works. And then you ask whatever questions you want. But do me a favor. Keep in mind that I am live streaming on 9 different channels, which means there's a whole bunch of people asking questions. So if I don't get to your questions as quickly as you want me to, tough shit. Terribly sorry. I get 6 screens in front of me, which means questions, and I can't answer them all at once. But I will do my best to answer each and every one before the night is over. So right around 10:30, we're going to stop looking at stocks, and then I'm just going to answer questions. I'll answer questions in a little bit, but let's get the ball rolling and see where we are. So if you're new here, I do everything by the book, ABC 1, 2, 3. See, I don't do anything strange and weird, and I don't change my strategy for anyone or anything. Okay, I have over 1,200 videos on YouTube. You can go look. They're always the exact, even back as far as 2011, because the very first post I made was August 2011. So I've been sharing a lot for a long time. However, it's only been the last 2 years that someone said, hey, we can go live using a phone. So I got 6 iPhones in front of me, and it's like, go live, go live, go live. It's that easy nowadays. It wasn't that easy years ago. Hell no, I'm not doing PayPal. Sorry, who said that one? Emirates. PayPal doesn't have weekly, PayPal doesn't have dividends. All right, we'll take a gander at it just for the fun of it. What are we going? BMY, UNG. Okay, sit tight. All right, so first one on the list, you will see it's step by step, kind of like paint by numbers. 1 red, 2 blue, 3 green, 4 yellow, whatever. Same thing, A, B, C, 1, 2, 3. Step number 1 is accumulate a set of stocks that you like. Okay, there's 10,000. Ooh, let's check it out right now. Right now, we're going to go see how many stocks have they added this week. For that, we're going to look under FinViz, right there, stock screener. Now, FinViz is a financial visualization website. Okay, when I'm looking at the screener, it allows me to take a look at what's up. Now, here we go. You ready? Here's the new number, okay? 10,457 companies available on the stock market this week. That's a big jump from last week. Hold on, we don't need to see this. Okay, who pays dividends? Well, here we go. Out of 10,457, 5,911 are companies that share their profits. That's still a lot to choose from. Now, how many actually have options available? Now we're at 3,483. That's still a lot to choose from. So how do you figure out which ones that you want? That being said, let's progress with Siri. All righty. So, Siri, here we go. Now, when I'm looking at a chart, the very first, oh, wait a second. Wait. Remember I said steps. Step one is accumulate a set of stocks that you like. Now, the stocks that I like are companies that are consistently profitable for more than 20 consecutive years. Now, those, are you ready? Got a pen and paper? Crayon, mascara, lipstick, I don't care. Dividend Kings. 5 decades. That's 50 years of increased profits. Dividend Aristocrats. 25 years of increased profits. Dividend Champions. 25 years of increased profits. The rules are different for the champions and the aristocrats, but still, both of them, 25 years of increased profits. Dividend Contenders, 10 to 24 years of increased profits. And then just for the fun of it, just because we like to pick on Warren, we're going to take a look at what Warren Buffett has and, copy his trades. Why not? If there are any other investors that you admire, that you, want to copy their trades, hey, make sure they're weekly options, make sure they're consistently profitable, make sure they have dividends, blah, 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 whatever. Pick your choice. That's rule one. Pick your list of companies you like. Rule number two, or step number two, put them all into a calendar. Now, the reason why I say put into a calendar, see this calendar behind me? This is called an EX dividend calendar. Okay, it's just like a regular calendar. September 25, that's this month. We are actually in the 28th right here. Okay, right here, the 28th. That's today. Okay, so we have all these companies here and 138 on Tuesday. So you got 138 on Tuesday, 4, 8, 12, 16, 19. So 19 on Monday, 138 on Tuesday. That's a lot of companies to look at. And then look what we got. Wednesday, a whole bunch. Thursday, a whole bunch. Friday, a whole bunch. That's a lot of companies paying out a dividend. So, why put it into a calendar? You're going to love this one. You ready? Because most dividend stocks have a tendency to go up in value just before the dividend. So, if I see a company that I like, let's do this. Let's get out of this. Let's do this right there. All right. Now, all of these companies right here, okay, all of them have 25 years of increased profits. Okay, you know some of them. Cincinnati Financial, Coca-Cola, T. Rowe Price, McDonald's, Stanley Black & Decker, Lennar, Nordson, Albemarle, Chubb, Pepsi, Kimberly-Clark. You may have heard of some of those. Consistently increase their profits for more than 25 years. That's a quarter of a century. That's a lot. So if you want to collect the dividends from Medtronic, oh wait a minute, no. That was Friday. That's already gone. If you want to catch the dividends for Roper, okay, here's Roper, ROP, which is this coming Friday the 3rd. If you want to catch those dividends, you got to buy the stock before that date. That little green dot right there, ROP. That is called the EX dividend date. That's why this is an EX dividend calendar. Okay, so you put into the calendar, it tells you when the stocks are going to pay their dividends. Great, those are the only ones I look at during the week. Well, this is the first week of September. Look at all those. Now, that's just one list. I've got like 7 lists. This is just one of them. Come down and personal list. Ooh, CBOE, weekly option. Look at those. Isn't that nice? Ooh, what do we have? Ooh, Comcast, Campbell's Soup, Bristol Myers Squibb, Entech, Cisco, Philip Morris, Cisco, Micron, Comcast, I already said that, Cardinal Health, John Deere, USB, USPS, USB Bank, ooh, Nucor, Annaly, ooh, nice. General Electric is tomorrow. See, these are companies that I want to take a look at, okay? Because just before the dividend, the stock has a tendency to go up. But I'm not buying these this week. All of these I would have taken a look at 2 weeks ago. So these stocks I would look at on the 15th because it gives them 2 weeks to make that movement. Well, it's predictable. Almost all of these stocks here, almost all of them have a tendency to go up in value just before the EX date. So knowing when a stock is going to move is only a small part of it's an important part of the equation, but it's still a part of the equation. Okay, so step 1, come up with your list of stocks. Step 2, put them into a calendar, and the calendar will tell you when to look. Okay, so there's no point for me whatsoever. Okay, it's Humana, Best Buy, Waste Management, Novo, NVD, whatever, VFC, Harley Davidson, Hewlett Packard, Cole. Now those were weeks ago. They paid their dividend weeks ago. I don't want to look at those this week because they already paid their dividend, which means after they pay their dividend, they usually go down. Not always, but usually. They go up before the dividend. They usually go down before the dividend. Usually. Okay, now years ago, I used to have a piece of software that told me exactly what they did on average over the last 10 or 15 years, depending on how I set up my software. Well, that was great. But then they changed all the algorithms, and now it doesn't work anymore. But hey, it worked great when it did. But it gave me the idea that stocks move predictably just before the EXA. So knowing that gives me an edge. Great, you take that edge, you put it along with a safe, predictable strategy. The covered call. Great. I'm not looking for the stock to move. I'm looking to collect that premium, that insurance payment. Now, if you're over the age of 18, you know what insurance is. It's insuring a certain thing for a certain time frame. What is that time frame? Now, for an insurance contract to be valid, you need 4 things. Beginning date, usually Monday morning. An ending date, usually Friday afternoon. Consideration, that's the premium, the insurance payment. And then 4th is the technical term is called meeting of the minds. It's just an agreement between one person and another. So basically, I'm buying a stock, I'm selling it to you at between this day and this day at this price. That makes sense? So if I buy whatever, let's go back to where we were. Trade and here. Okay, so conversation at the moment, 22.70. I'm going to buy it at 22.70. I'm going to sell it at 22.50. The beginning date is tomorrow morning. The ending date, 3 October 25. That's 5 days. See that right there? 5 days. Okay? Now, the agreement is after I buy this, the agreement is I'm going to sell it to you, whoever buys the option from me. See, I sell options, I don't buy them. 80% of all options expire worthless, so I don't buy options, I sell them. So, I'm selling somebody the right, not the obligation, to buy this stock from me anytime between tomorrow morning and Friday afternoon at $22.50. Remember, I'm buying it at $22.70. I'm selling it $22.50. And for that person's paying me 51 cents a share. That's $51 per contract. So let's do some fun math to see exactly what kind of rate of return that is. And then we'll progress to the next stock. Okay, before we do that, step 1, come up with your list. Step 2, throw them into the calendar. The calendar tells you when to look from. Next step is to take a look at the 1-year chart. Now, when you look at the 1-year chart, a lot of people find this odd, but it should take you 3 to 4 seconds. That's it, 3 to 4 seconds. Okay, now we can spend hours looking at this, and seriously, I could explain within an hour all this here. But that's not what I'm looking for. I'm looking simple, safe, predictable, consistent, and no way to lose. That's what I'm looking for. So 3 to 4 seconds. You ready? This is what I'm looking for. 5 things. Every time I look at a chart, no matter what it is, 1-year chart, 90-day chart, 30-day chart, whatever. 5 things. Number 1, the high. Number 2, the low. Number 3, where was it? Number 4, where is it? Number 5, what is the flow? Where's it going? What's the motion of the ocean, the trail through the woods, the path through the woods, the bend in the river, whatever you want to call it. Okay, down, up, down, up, down, up, down, up, down. What's going on right here? That's the whole year. Did you see how quick that was? High, low is 3 to 4 seconds. And if it passes that, then I'm going to the numbers. Remember, rule 5, make sure all the numbers work. Great, what am I buying it for? What am I selling? What is it paying me? How much is that? Well, to find that out, let's actually do one. Well, because that's more than 1%. Okay, once I figure it's more than 1%, then I go to the next step. The next step is taking a deeper dive into the chart. Because at a first glance, 3 to 4 seconds, well, yeah, it fits. It's not it's not at the high of the year. It's not falling like a rock. It's kind of like somewhere in between. Fine. Ooh, I got me a rose. Who was it? Starling. Yay! Ooh, I got another one. Woo! All right. So that being said, let's take a deeper dive into the chart and read the numbers and then see what the chart is telling me. A year ago, 2409, the high of the year, back in the beginning of December, was 2927. Now, just like almost every other stock, the stock market bottomed out the second week of April. We call that TDS day. Okay? Now, I'm not going to go into it because some people get a little touchy about it. But the second week of April, almost every stock had a bottom in the second week of April. Okay? From there, she shoots up, pulls back up, back down. See? High, low, where was it? Where is it? Up, down, up, down. What's going on here? Because it looks like it changed directions on Friday. Well, if that's true, let's take a deeper dive, a little closer. So that's like 90 days for the last 3 months. Well, now I want to look at the last 30 days. Because the last 30 days is just 1 month. Okay, so just 1 month. Because we're trading weekly options. So we want a good idea of where do we think it's going to go between now, Monday morning, and Friday afternoon. It's not that difficult to look. I mean, look, think of a teeter. Remember the teeter totters in elementary school? Up, down, up, down. One side goes down, the other side goes up. Same thing here. Down, up, whoops. Down, up, 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 down, up. Now she's going back up again. That's what it looks like. Because it's a repeatable pattern. Because we are investors. We're all looking to do the same thing. Now, if the stock is at the bottom here, and then we say, oh, wait a second. Serious? Siri is at 1866? Oh, hell yeah, I'm going to buy some of those. So then a whole bunch of us buy. What happens when we all buy? She shoots up. Well, now here's the high. Because now it's at $25 per share. And it's like, wait a second. Hold on a second. Went from 19 to 25. That's $6. It's a $6 move. Well, a $6 move on a $19 stock is about 30%. Think about it. 30% in a couple of months? Hell yeah, people are going to take profits. What happens when people take profits? The stocks drop. Okay, now it's dropped down here. It's at 21. Holy shit. Series at 21. Yeah, I'm going to buy some. 21 to 25 is $4. Well, $4 move on a $20 stock is just a little bit less than 20%. Okay, 20%. Now it's coming back down again. Because if she goes up at 20% in 30 days, well, I like 20% in 30 days. Okay, so new bottom possibly right here. So let's zoom into the last 30 days and see exactly what's happening. And maybe the 28th, there it is right there. Maybe it'll continue the path that it looks. And we can do a safe, predictable strategic trade for this week. But here's the big thing. Besides, does it make sense? Well, the next question, obviously, do I like this company? Well, You're not going to buy something you don't understand or you don't like. So we're going to look at a lot of stocks tonight. And you're going to say, who the hell are those? If you don't know who they are, if you don't know what they do, it should be an automatic no. Just because it looks good, just because I might be buying some, well, I already own some, so that's not the point. Just because everything looks good doesn't mean you should buy it. Okay, I don't give tips, I don't give advice. Well, I do give a little bit of advice, but not on what to buy. I tell people, if you're going to start trading, paper trade first. It's kind of like playing Monopoly. You're not risking anything. Hopefully, you're learning something as you progress. Paper trading, it's kind of like playing Monopoly. 4 greenhouses, 1 red hotel, round and round and round we go. Where do we stop? Nobody knows. Same thing, but you're not risking any real money. So as you get better paper trading, you will know when you're ready to put real money in. That's one piece of advice. Next piece of advice I give, don't do margin until you understand the risks involved. It's great, the numbers look great, it's wonderful, but when you're borrowing someone and trading someone else's money, it can be very risky. So yeah, don't do that until you understand everything. But here we go. We are currently looking at the last 30 days. Give me a second. Now, I'm not used to talking so much, so I drink a lot of ginger tea with honey. Well, tonight we have ginger tea with honey and NAD. It's supposed to be something to make me younger. Just what I need to make me younger. Okay, anyway, so here we go. Same thing. High, low, where was it? Where is it? Down, up, down. Oh, come on, that's obvious. You cannot tell me that's not obvious. Here's the high here, 24.90. Here's the low, 22.20. Well, great. That kind of makes sense. So, yes, let's take a look. Now, for me personally, I like 2 days to the upside. We only have one here, but I'm showing this as an example. I like 2 days to the upside, and then on the third day, if everything looks good, I'll jump in. See? Here's the bottom right here, 2 days to the upside. Okay, 1, 2, I jump in right there. Because on the third day, after it's up, that's the rule for me. You've got to figure out your own rules. Okay, whatever's right for you, that's what you do. Okay, don't listen to me. What the hell do I know? I don't know anything. Who said that? Wasn't it Socrates said that? All I know is I know nothing. Anyway, all right, so let's get rid of this. Let's do a 22.50 trade. All right, and to do this, first thing I want to do, now I use Thinkorswim. It's through Charles Schwab. You can use whatever you want. Okay, I wrote a book about 15 years ago, choosing the right trading platform for your style of trading, whatever it is. Okay, but this is what I came up with. I've been using this exact same platform for over 20 years. The nice thing about it, it hasn't changed. It's changed owners. Okay, Tommy Boy created it. And then it went to TD Ameritrade. And then TD Ameritrade got bought out by Chucky. Now Chucky owns it. Well, great. So I trade through Chucky now, but I still use the same platform, which I think is awesome. But, I did try the other ones. I did try Scottrade. I did try E-Trade. I did try Just to Trade. I tried a whole bunch of them. Now, I do trade on 2 platforms and Robinhood. Charles Schwab and Robinhood. I love Robinhood. It's right at the fingertips. I could be at a stoplight waiting and go, all right, where can I make money today? Yep, I'll do that. I made over $1,000 one day at a stoplight. Click, 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 click. There you go. That works for me. All right, so anyway, here we are. So we're going to do a sample trade on series so you can see how it works. And then we're going to check the numbers. And then you can ask yourself, does this make sense? Or does it not make sense? That's it. Does it make sense? All right, so let's go. Current price, $22.70. I'm selling the 22.50s. Let's do this. So first thing right here, click right onto that, and that shows me all the trading stock option strategies. Okay? Single, vertical, back ratio, calendar, diagonal, strat, blah, 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 blah. We're just going to do this one right here. It's simple, it's easy, it's quick, and it's safe. It is so safe you can actually do this trade, the covered call, in your IRA. A lot of trades you cannot do in an IRA, but the covered call you can. It's actually that safe, and it's simple too. All right, so 2250 right here. Okay, I'm buying it right there. All I do is just click and magically it's all right there. There it is. That's the preset. So I'm going to take a look at it, and I don't want to buy 1,000 shares. I'm just going to do one contract. So to show you what one contract looks like. That way you can calculate in your own head, does that make sense? Like if you can, if one contract is going to be this, and you have this much money available, well, maybe you could do 7 contracts, 15 contracts, 132 contracts. We're all different. We all have a different path. We all have a different amount of money. Me, I average somewhere between, I think the lowest I've done was 1, and the most I've ever done was like 500 contracts. That's the most I've ever done. Now, you are probably going to get started, and you can do whatever is financially feasible for you. All right, so here we go. I always encourage people to read it out loud so you can hear it, because your little fingers can hit the wrong button. Your eyes can play tricks on you, okay? But as you read it, listen to it. Does it sound right? So this is what it sounds like. Now, break it down, because right now it's all one big, huge sentence. It's like a run-on sentence. Remember those back in elementary school? A run-on sentence. Way too big. Let's break it up. Here we go. Let's break it up. Buy one contract, one covered call contract on Siri, right there. Buy one covered call Siri. 100, which is the weeklies. That means it has weekly options against it. 3 October 25. That's this coming Friday. That's just the date. 3 October 25. That's this Friday. The $22.50 call option. That's what I'm selling it for. Get the Siri, buying Siri at the market to open. Now, I didn't repeat myself and I didn't stutter. To open, basically we're doing 2 trades at once. We're buying the stock, that gets sent off to New York. We're selling the option for someone to buy it from me for the same price I just paid for it. That gets sent to New York, Chicago, New York, 2 trades. Okay, so maximum profit. Do you remember the part where I said simple, safe, predictable? Well, we've already said a covered call simple and it's safe. Predictable. Okay, I know exactly what I'm going to make before I even do it. Now, most people will buy a stock and wait for the stock to move for them to make their profit. Now, not so with a covered call. The stock doesn't have to move at all. It could say exactly where it is and I'll still make money. That's why I like it. It doesn't have to move at all. But it is, remember we saw it, 30-day high, come down to a 30-day bottom. Now she's turning around going back up again. Is it going back up again? Don't know. It could be. That's why we wait until tomorrow morning to see where it opens up tomorrow. And if it opens up higher, that could be, it's hit the bottom, now she's turning around going back up. Could be. That's why we wait until after the market opens before we place this trade. All right, so $33 is my profit. Now, $33 is per contract. 1 contract, $33. 5 contracts, $33 times 5. That's 180 something like that. All right, that being said, let's figure it out, the rate of return, because it's $33 for the profit. What is my investment on this particular trade? Cost of trade, including commissions and fees, $2,217. So you can look at it any way you want. The way I choose to look at it is I am creating, or I am buying, a weekly cash producing asset. You can think of it as stocks all you want. I'm looking at it as a weekly cash producing asset, because every single stock I buy it with this specific intention. So every single stock I own, I am collecting something every single week. Earn your weight, earn your whatever, however you want to put it. Okay, so anyway, 22.17, the profit's going to be 33. To figure out the rate of return, we're going to need a calculator, because I can't do that off the top of my head. All right, First and foremost, let's clear this. All right, $33 is the profit. So to find out your rate of return, you take the profit, 33 bucks. You divide it by the cost of the trade, 22.17. Okay, $33 divided by $2,217, and it gives me a grand total of 1.48. 1.48 for 1 week. So if 1% a week is over 50% per year, well, what's 1.48? That's 1.5%, just about. Well, that's not bad, is it? So the question should be, do I like Siri at this current price? Am I willing to buy it, sell a covered call every single week until it hits my target price? What's my target price? $22.50. What's the stock at right at this moment in time? $22.70. Do you see it? Who sees it? If the stock does absolutely nothing, I make my profit. I get all my money back on Monday because the option actually expires on Saturday. So I always tell everybody, if you're going to be trading, if you're going to be doing this, don't look at your account on, after the market closes on Friday. Don't look at it on Saturday because it's going to look all messed up. Sunday is the day you look because the mathematics and all the dotting of the I's, the crossing of the T's happens on Saturday. It makes your account look wonky. Looks crazy. So I tell them, don't look at it on Friday night. Don't look at it on Saturday. Look at it on Sunday or Monday, one or the other. All right, so 1.48 for Siri. Do you like Siri? Does it make sense to you? All right, so next on the list. Freeport had a mudslide take out biggest gold mines. All right, Eric, I don't buy gold, so it's not really an issue for me, but all righty. So Eric wants to take a look at Nucor and BA. Boeing. Okay. So that's it for Siri. I'm going to write Siri down at 1.48. I write everything down that looks good. 1.48 for Siri. All right. Next. All right, let's get out of this. Let's get out of that. Let's get out of this. Let's get back to where we began. And hopefully, just hopefully, that was enough explanation of everything that I do. So hopefully, we can breeze through a whole bunch of other stocks with very little I'm lagging. Uh-oh. Hollywood Norwood says I'm lagging. Okay. Sorry. And I have an echo. Uh-oh. That's not good either. All right, so hopefully we can breeze through the rest of these without too much talking, gabbing. All right, so Nucor, N-U-E. N-U-E. Oh, I like that. Do you see that? It should take you 3 to 4 seconds to see that. Let me show you really quickly. High. Low, where was it? Where is it? Look at this. Up, down, up, down, up, down. Now she's going up. Look at that right there. Here's your bottom. Couple days to the upside. Yeah. Oh, hell yeah. I like that one. Next, what's the numbers? 138.13. The 138 is going for 230. Oh, yeah, that works too. Great. Now let's look at the chart a little bit deeper. Is it the right time to buy Nucor? Because the numbers work and the chart's okay, and it's on my list. Okay. I wouldn't be looking at it if it wasn't on my list. So it's on the list. Everything looks good on the chart. Everything looks good on the numbers. So let's go to the next step. A year ago, 151. The high was in the beginning of November, 170.36. Here's that bottom again. Remember I told you second week in April, TDS. Okay, right there. TDS right there. Okay, high, low. Where was it? Where is it? Up, down, up. Pretty simple, right? Adults have a tendency to make this more complicated than it needs to be. It was created for my 9-year-old daughter back in 2008. Simple, safe, predictable, blah, 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 blah. You know all that stuff. But that doesn't look bad at all. Okay? She shoots up. Here's the high. Pull back right there. Profit take. You can call it whatever you want. Correction, pullback, profit taken, adjustment, going down, sell off, whatever. You can call it whatever you want. You say, here's the bottom, 90 something, shoots up to 120. That's $30. $30 on a $90 stock is 30%. Shoots up, profit taken back down. Back up here, goes from 105 to 125. That's $20. $20 on a 105, that's almost 20%. Okay, so you had 30% down, 20% down. It's all a numbers game. Here's the top right here. Now she dropped, now she's going up again. Great. Let's zoom in a little bit closer. Last 30 days, looking at the 28th, right there. Argue all you want. Argue all you want. 30-day highs right there. 30-day bottoms right there. 1, 2, 3, 4. 4 days to the upside. It is what it is. Okay, you get a 30-day high. People start taking profits, and then she drops. Finds a new bottom. 3 days to the upside. 1, 2, 3. Boom. That's what I'm looking for. So that being said, let's do Nucor at 138. Let's get rid of you out of the way. Back here, 138 right there. One contract. I'm trying to go as quick as possible. Market, there we go. And here's Johnny. Buy one. Covered call Nucor 100. That's the weekly 3 October. That's his Friday. 138. That's my sale price. If I'm buying it at 138.13, I'm selling it at 138. Okay? My profit is $232 per contract. Well, each contract is going to be 13 grand. Okay, now it's not spending, it's investing. So, number one, if you like the company, well, great. If it's profitable, they're going to give you a dividend 4 times a year, every 90 days. Okay, there's 4 quarters. There's 365 days, 12 months. Those 12 months are broken into quarters. First quarter, January, February, March. Second quarter, April, May, June. Third quarter, July, August, September. Tuesday is the last day of the third quarter. Wednesday, October, November, December, the beginning of the fourth quarter. We got 2 days to the end of the quarter. Great. Well, if I'm investing in a company, I'm just buying the stock. Either I want to hold it long term, get that dividend and get that weekly cash flow every single week, or I want to get out as soon as it hits my target. If I'm buying at 138.13, my target's 138. Is it going to stay above 138 between now and Friday? Well, we saw the chart. It hit the bottom a couple of days ago, turned around. Now it's going back up. Well, that makes sense to me. All right. Anyway, let's do the quick little math. What rate of return is this? So 232 is the profit divided by 13,568. It gives me a rate of return of 1.7%. All right, I'm going to put Nucor down at 1.7%. 1.7. Nice. All right. Next, you want to take a look at Boeing. Boeing. Let's see how quickly we can do this one. That one was pretty quick. So once we get all the niceties and the technicals out of the way, the rest should be relatively easy. Now, I'm going to pull up Boeing, the 1-year chart. Count to yourself. Seriously, count to yourself. How long does it take you to see the high, the low, where was it, where is it, and where is it going? Count. It's not that difficult. Okay, BA. BA. Oh, you ready? 1, 2, 3. High, low, where was it, where is it? Up, down, up. 3 or 4 seconds, right? We'll take a look. Now, it doesn't look that bad. See, top's here, pulled back. Okay, now she's going up again. All right, plain to see. Next, 221.26. Well, we got the 220s, which are going for $4. We get the 222s, which are going for $3.25. Well, it's kind of like in the middle. So for the fun of it, let's do both of them and see which one is better. Okay, the 220 or the 222.50. Keep in mind, the 220 is safer. Now, when I say safer, well, the stock's already at 221. If I'm selling somebody the rights to buy it from me at 220, I'm losing $1.25. Okay? So I take $1.25 off of this, I'm walking away with $3.15. And all the stock has to do is stay above 220. Well, let's just do that one. Let's not do the 222. All right? So let's just do that one because it's a safer trade. I like safety. I'm only looking for 1%, and that's going to give me probably 1.5. So let's just take a look. And do I like Boeing? Well, I already own some of it, so that's besides the point. Someone want to take a look at it, so let's take a look. Okay. A year ago, 153. TDS, there it is right there. Second week of April. 128.88. Well, same thing. High, low, where was it? Where is it? Up, down, up. Easy to see, right? Okay. Next, last 30 days. Here you go, last 30 days. Now, that sticks out like a sore thumb, doesn't it? Look at that. The high, the low, where was it? Where is it? Where's it going? Down, up. Well, it's a weird one. It's not as clear as I would like it to be. Okay, so the high is what it is. She drops, here's the bottom right there. Now, the very next day, she was up. Then she was down, and then she gapped up. But here's the bottom, 2 days up, right there. Depending on how you want to look at it. You want to split hairs and say, you decide. It's always, always, always going to be your decision what to buy, what not to buy. Does it make sense or does it not? So the 220, let's do the 220 and see what it looks like. See what it sounds like. All right, one contract, there it is, at the market, there it is, and here we go. Buy one covered call, Boeing, 3 October, the 220, 271, 21,000, those are all the numbers. Let's see what it comes to, okay? See what it comes to, calculator. 271 and 50 cents. Can't forget that 50 cents. You add enough of those up. Adds up. Okay, so 21,729 gives me a grand total of 1.24 or 1.25. That's 1.25. So far, we've seen 1.25, we've seen 1.5, and we've seen 1.75. So this one, 1.25. All right, I can deal with 1.25 for 1 week, and it's Boeing. I know what they do, so I'm okay with the company. The price, I don't know. I'm pretty much okay with buying it at that price. Next, all right, so we looked at Eric's and Mark. Mark wants to do this just for the fun of it, okay? Before we do yours, Mark, let's take a quick look at FCX because I have this up. Oh, well, Lisa wants to take a look at FCX. It's already up. It's so much easier to do that first, and then we'll take a look at SPY. SPY. Okay, get out of that. Get out of that. Change this. Go back to here. And what was it? FCX. FCX. Now, I had FCX a while ago. I don't know if I still have it. I don't know. To be 100% honest, I don't know if I still have it. Now, I did buy it, but I don't know if I still own it. You know what I mean? Because I have the set it, forget it type scenarios. Like, this is what I want. You give it to me, fine. I'm gone. So you get to a certain point where you can set up your trades and walk away from them, and they will fill automatically. Well, I like that idea. But like I said, I did buy it a couple of weeks ago. I don't know if I still own it. But FCX, here we go. High, low, where was it? Where is it? Okay, down, up, down, up, down. Big drop right here. Got a gap here and a big drop. So it's not quite there yet. Let's take a quick look right here. See that? It only has, here's a gap down, keeps on dropping. Here's the bottom here. Here's 1 day to the upside, only one. I like 2 days to the upside, so possibly tomorrow, if she's higher, great. Then Tuesday, if it's higher again, remember, I like 2 days the upside, and on the third day, I will jump in. You got to figure out what you want. So if you like that right there, well, be my guest. It's not what I'm looking for. Now remember, I'm looking for safety over profitability. So although I do like FCX, and yes, I have bought it in the past, I personally would wait until Tuesday. But that's me. You've got to figure out what's right for you. All right, so that was FCX. Do we have anything else? Okay, Freeport. Are covered calls always executed at market? No. No, because you can, okay, who said that, James? James, you have a choice. Okay, whenever you do a covered call, you got a choice. Do it at market price. Now, I like market price. Let me tell you my reason why I like market price. Okay, I'm part of the new generation. I'm part of the problem. I admit it freely. I admit it. Okay, I'm at that point in my life. Market order is, I want it now. I don't care what the price is. The reason why I say that is because, remember when I said the trade is already preset? I know exactly what I'm going to make beforehand. Okay, simple, safe, predictable, and consistent. Remember all that? Well, when I do a trade at the market, the stock order and the option order are already posted. So if I said, yes, I'll take it at that price, they're already connected together. So I'm getting the stock at the current price, and I'm getting the option at the current price. So what I showed you, the maximum profit, that's what I'm getting. So limit order, you can do a limit order, and a limit order are for those people that are a little picky. Okay, this is what I want to pay. This is what I want to get. You can ask for whatever you want. More power to you. Okay, so right now it's at 35.75. So you can tell the market maker, hey, I want to buy this FCX, but I want to pay 35.65. Limit order, good to cancel. Well, he doesn't have to fill it if he doesn't want to. But market order, he's required, and the funny thing is they're required by law to fill it if it is listed and posted as a market order. Because that's part of the job of the market maker. If you're offering something for sale and that's the price you're offering, you are required to fill it at the market price. Now, we don't know. The only thing we can see this right here. Okay? The market maker's computer changes all the time. His changes faster than ours change. So when he changes his pricing, well, we don't see it right away. So there might be a little discrepancy here and there, but I'm already at that point in my life where I don't care about the pennies. Now, for some of you, that might be important. You know, hey, I want to buy it at $35.65. I don't want to pay $35.75. Great, do a limit order. Don't be surprised if it sits and waits all day for it to fill. Because no matter what happens on a covered call, the maximum amount of time value. See, if you really want to find out what's inside of an option, there's a whole bunch of stuff. There's the stock price, $35.75. There's the implied volatility. How many people are breathing down our necks to buy it? Well, 41 million bought it on Friday. That's implied volatility. How many people out there buying and selling it? Then you have the theta decay, which is the time value. Time value is always ticking. Tick tock, ain't no way you got to stop the clock. You can't stop it. Friday's coming whether you like it to or not. Okay? January 1st is coming whether you want it to or not. You have no control over that. The only control we have over time value is selling time at 9:30 a.m. until 3:59 p.m. on Friday. That's the maximum amount of time value. So the longer you wait to get your orders filled, the less time value you're going to get. Now, there are a lot of other factors in the option price. Mine is pretty simple. If the stock price is 35, I want a minimum of, 35.75. I want at least 36 cents. That's 1%. Well, the 36s are going for 74. That's 2% trade. That's 2%. Oh, hell yeah. Because if 1% a week is 50% a year, 2% every single week is over 100% a year. When's the last time you doubled your money in 1 year? safely. Because remember, we're only buying dividend stocks that are consistently profitable. And every single year, they make more and more and more money. That's my rule. I don't care how shiny and bright your little shiny object is. If it's not 20 years old, doesn't have 20 years of consistent profitability, I don't want to look at it. It's a waste of my time. We saw it a little while ago. 10,474 different companies. Oh, was it 75? I forget. 10,474 companies that you can choose from. Yeah, hell no. I'm not looking at all of those. I have my list. That's what I want. It's simple. It's easy for me. I've been doing it for years, so I don't really mind. Play swappy changey with these lightning plugs. I gotta get some more of these. Now, how the hell can a lightning plug go bad? Okay, you put your phone charger into your phone, and then 3 weeks later, you got to get a new phone charger. Well, how the hell can it go bad? All you do is just sticking it in there. Anyway, all right, next. So that's FCX. If you like it, that's always the big question. So that was my mistake last week. Lost my ass. Good thing it's some paper. James, like I said, paper trade first until you perfect it. Once you perfect it and you're consistently making money, you will know when it's time for you to put real money in, because that nagging voice in the back of your head says, you're ready, you're ready, you're ready, you're ready. Until then, just keep paper trading, keep learning. It's like anything. First time you drove a car, you want me to do this, 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 and I got to pay attention to what's in front of me. I remember that. I first learned on a stick shift. This, that, clutch, brake, shift, gas, RPMs, up, down. Oh, yeah, fun. All right, so anyway, next, Smarty Pants wants to take a look at SPY and explain to you people why I don't like SPY. Here we go. All right, I want to come down to historical data. Okay, this is AT&T. We're not looking at AT&T. We're going to look at SPY, but I want to get to historical data first. Now, a little tidbit of advice I give to people. If you are going to be investing, if you are going to take your hard-earned money and put it into an investment vehicle, we're talking about stocks and options specifically, you need, or it would be a good idea for you to have at your little fingertips, a financial website that you could go into and find information that's not available on your trading platform. Now, this information I'm about to show you is not available on the trading platform, but it is available on Yahoo Finance. I have no idea about any other finance website, because this is basically the one I first started with 25 years ago. Okay, ever since Yahoo Finance came out, I was like, oh, this is cool. All the information was right there. So I've been using the exact same one. I have no idea about Google Finance. I know they have one. Okay, but what we're looking at, SPY, spiders, S&P 500 ETF, SPY. Okay, now, well, another low battery. What the hell's going on there? Yeah, I need me some more lightning plugs. There we go, that works. Okay, so S&P 500 ETF SPY. First of all, it's $661 a share. Okay, I try not to jump into anything, over 250, but that's me. Let me explain to you why I don't like SPY. Okay, now historical prices, dates. Okay, so you have the dates, the opening price, the high, the low, the close, the adjusted, and the volume. It tells you everything you need to know about the stock, all the way back to when they first started writing it down. Well, that's pretty damn cool if you think about it. All right, so we're going to look at dividends only. Dividends only. I could care less about everything else, because I only want to know whoever is running this little doohickey, are they running it to a point where they're consistently profitable year after year after year? Because that's what I'm looking for. Okay. September 29, 2024. Yeah, no, I want to go further back. I'm going to go all the way back until 2005, because that's 20 years. Remember, hey, I don't hide it at all. I want to look at 20 years. Okay, all the way back to 2005. There it is right there. Isn't that lovely? Look at that. Ain't that peachy? All the dividends. Look at 75, 81, 65, 55. Well, what I'm looking for specifically, I want to make sure 2006, they made more money than they did in 2005. And then 2007, I want that to be higher than 2006. And then 2008, I want that to be higher than all of these. Consistency of profitability year after year, higher and higher and higher and higher and higher and higher dividend. That's consistency of profitability. Making more money this year than I did last year. Making more money last year than I did the year before. Making more money than I did. What the hell is that? What the hell happened here? Can't see the whole screen. Okay. All right. So somebody over here, Alex says he can't see the whole screen. Alex, I'm going to apologize for you guys right now. I didn't tell you earlier, okay, that this whole screen here is live on YouTube. So you can actually go to YouTube and watch it. What are we doing? Right there. Okay. That looks about right. All right. So this screen is live on YouTube. Makes it easy to see the little tiny numbers. Okay, so you can actually go into your other room, okay, and watch on the big screen TV. You remember that big 80-inch screen TV you got last year for Christmas? That one? Yeah, go watch it on that. All right, anyway, let's take a look on SPY and see, are these numbers consistently going up? Well, let's take a look. Some of you already know this because some of you have seen me do this before, but Bonehead over here, he thinks it's funny and he wants to see me do it again. He's seen me do it once, he just wants to see it again for those of you that are new and for those of you that like SPY. Okay, so 20 years ago, 46 cents per share. It goes 46 to 48, that's higher. 52, that's higher. 67, oh, this is looking good, that's higher also. 67. 51, hold it. 51 is less than 67. How much? Okay, hold on a second. 67 to 51. 16 cents. Now, that's not a lot, but here's the thing. 16 cents on a 67, what, that's 12, that's 20%. That's a 20% decrease. Explain to me in a manner which I'll understand. Going from 67, decreasing the dividends, decreasing the profits by 20%. Why is that a good thing? Okay, hold on. It gets worse. It really does. All right, so 51 to 55 higher, 57 higher, 79 higher. 55, hold on a second. It goes from 79 to 55? That's more than a 20% decrease. Okay, decreased here, decreased here. Hold on, we're not done. We got a long way to go. So 51, 65 higher, 71 higher, 77 higher. That's December 7. Okay, December 7. Okay, 77. 64, that's lower. That's a 10% drop. No, it's not. That's a 20% drop. No, wait a minute. 64 and 7 is 71. Okay, 16, that's, yeah. No, it's a little bit less than 20%. Okay, 64, lower. 66, higher. 69, higher. 71, higher. 56, lower by over 20%. 51, lower again, 10%. 50, lower again. I'm going to stop here because this keeps doing it over and over and over again. But if you order now, you get 2 for the price of 1. You ready for this? We're going to take a look at summary. Okay, so this is the actual numbers. So as you can see, 3 steps forward, 2 steps back, 2 steps forward, 1 step back. up, down, up, down. No consistency of profitability whatsoever. It is what it is. Numbers don't lie. Okay? So we're going to look at the summary and show you exactly what your rate of return would be if you jump into SPY and held it for over a year. Remember, $661 per share. And you get a whopping, are you ready for this? A whopping, brace yourself, whopping 1.11% for the year. Now explain to me why you think that is good. See, I'm strictly a numbers guy, okay? If I'm going to invest in a company, SPY, $663, now it's $663, okay. It's getting a yield of 1.1%. Hell no, I want 1% a week, not 1.1% per year. Look at your yearly, okay, year-to-date total return, 13.9. Last year, 1.1. Explain to me why you think that's good. So no, I don't like SPY. And there you go. There you have it. So let's get the chair out and we can answer some questions before we progress. Chris Forte, how are you today? Give me my chair. Get me my chair. What do we have for questions? AJ French, you're not in my end. I have no idea what that means, AJ. Don't know what that means. So let's go backwards and see what questions did we miss. Because I don't want to make, oh, look at it. Geo, what's happening? Now, do I get everybody here? All right, got everybody over there. Got everybody there, got everybody there. Where are we here? Monica, how are you? Manchester, what's going on? Oh, wow, all these questions. Questions. All right, here we go. The Kingdom Coach, Brian, DMC. Hey, Sea Wide Spinner. How are you doing today? All right, no nickname. What's happening? Wait, Golda. I don't know if I'm saying that right. Good evening from North Carolina. Good evening. Wonderful. I can't read that at all. I have no, it looks like Hindi. All right, okay, listen closely. Some of the comments are filtered out. Tap comments with and review the proof. Okay, got it. Victoria, good evening. Olivia, good evening. Jason, how you doing? CM, how are you? Oh, hola. Okay, cool. Holo? Is that a stock? HOLO? HOLO. Oh, hell no. Skip. Hey, James, just wondering if you can shift this screen just a bit so we're not seeing. Okay, I already shifted it a little bit. All right. K-Van, what's going on? Just me. 9-year-old daughter, you got a late start. Or maybe it's just continuation. Okay. Papa J, what's going on? What's the list? Papa J, the list, simple. Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Right there, it's about 300 really good companies that are consistently profitable. Okay, wide spinner, Dow, D-O-W, D-O-W. Ooh, interesting. I like it. Okay, high of the year is 55.63. The low of the year, 20. Did you see that? 55 to 20. Well, that is more than a 50% drop in price. Holy shnikey. All right, so we're at 22.96 at the moment. Look at what happened recently. Okay, here's your top. She drops back up, back down, and she's right there. Oh, let me. Oh, it actually did it right there. Okay, there's the new bottom right there. One day to the upside. So Dow, I'm gonna write. I think I did write that down. All right, so Dow is now written down as a possibility for next week. So what else do we have? All right, John. Hey, James. Thanks for the conversation Friday. I signed up. Look forward to Tuesday. All righty, Johnny boy. Oh, Dylan wants to take a look at Alcoa. Nice. Alcoa AA. Ooh, interesting. Same thing. Ooh, look at this. Oh, I want to zoom into that one. Oh, before I finish. Look, the high at 47, bottom's at 22, another 50% drop. Look at that. 50, oh, check it out. TDS day. Yeah, everything, almost everything you'll see has a bottom in the second week of April. But from 22, the bottom, to 32, that's a $10 increase. Now, a $10 increase on a $22 stock is just a little bit below 50%. Imagine that. From here to here, 50% return. So take your damn profits and move on. I want to look at this right there, though. That looks pretty cool. That's it. That looks pretty cool there, Mr. Dillon. Okay. 30-day high, 30-day bottom. Look. Up, down. She's going up. So not quite there yet. But I did write down for this week. All right, what else do we got? Looks good. Yes, you're right, it does. Oh, here we go. Ba-alas. Okay. I always love nice, happy people. What's your thought on J.P. Morgan? J.P. Morgan, JPM. No. Wasn't that quick? Remember, I told you, anytime you look at a stock, it takes you 3 to 4 seconds. Look at this. Why the hell would I want to buy J.P. Morgan? It's at the high of the year. That just makes no sense whatsoever. Oh, I got a call for someone. Oh, Fabrizio, I got a call for you. Okay, anyway. All right, so that being said, don't get me wrong. I like J.P. Morgan. It is on my list. But I ain't buying anything at the high of the year. That's just, no, that's a time to sell, not a time. See, why couldn't you ask me about J.P. Morgan a month ago when she's down here, or 2 months ago when she's over there? Why are we looking at now? No. Please answer my question. Gabriel, I'm not ignoring you. Okay, I'm concentrating on questions over on this side. I'm going to get to the questions over there in a second. Just give me a minute. Or 2 or 3. So I'm done with those, done with these, and now I'm on these here. So I'm going to do some more of these questions, and I'm going to come over to there. Okay? Gabriel, I'm not ignoring. Oh, Castleman. Gotta love it. Woohoo! Fireworks. All right, anyway. What stock is this? JP Morgan is what it was. I hate it when it moves. All right. Ricardo wants to take a look at Annaly and Kinder Morgan. Okay. Annaly, NLY. Ooh, interesting. Okay. Again, we're going to have to wait a little bit because, see, the bottom was Thursday. Friday is one day to the upside. NLY. I'm going to write that one. I think NLY. NL1. All right. And Kinder Morgan, KMI. No to Kinder Morgan. Only because. What do you think? Last 30 days? Not time for me to buy. I don't buy at the high. Target and UPS. Josh wants to take a look at Micron. MU. Hell no. Look at that, Josh. Your 30-day bottom's here. Big jump up. Goes from 115 to 170. 115 to 170. What is that, 55? 55 bucks? Well, 55, oh, really? Think about it, seriously. No, don't get me wrong, it's a good company, but here's the thing. It's at 115, okay? Jumps up to 170. That's a $55 increase on $115. That's a 50% increase. If you don't think they're going to have profit taken, oh, hell no. What's next? Target, TGT. Now, if you didn't know, Target is a dividend king, and we're bottom fishing on Target. Looking for the bottom, waiting for it to turn and go back up. Okay, right there. Possible, but look closely. Here's the bottom here. Last Monday, Tuesday was higher, Wednesday was higher, Thursday was lower, and Friday was kind of like even. We haven't gotten to the third day to the upside yet, which would be right there, right around 88. Okay, so he's at 87, 85. But it's the 30-day bottom I'm looking for, which was last Monday. So although I like it, oh, and UPS, huh, Tommy? UPS, the ups dudes. Same thing, looking for that new bottom. Okay, not quite there yet. Okay, next on the list. Collie, how you doing? Tax manual. Lava, okay. Have you looked at IREN stock? It has good premium. IREN. What the hell is IREN? R-E-N. Oh, hell no. No. Who came up with this one? Taxman. Okay, tax manual. Okay, think of this for a second, okay? See if this makes sense to you. Okay, back in April, this thing's at $5. Shoots up to 50. That's a big ass jump. That's almost a all right. 1, 2, 3, 4, 5, 6, 7, 8, 9. That's a 900% increase. 900% increase from here to there. Now it's coming back. Why do I want to look at it now? Okay, and a 900% increase goes from $5 to $50. Okay, 900% increase. Now it's pulling back. Hell no. Got a long way to go before I look at that one. Sorry, Taxman. Rudy, would you invest in an old company that split like Kellogg's? Isn't Kellogg's? Is Kellogg's K? No, I don't think it's K, is it? No, it's not. I forget what the ticker symbol for Kellogg's is. I don't invest in Kellogg's. Don't get me wrong, it's a good company. It's been around for over 100 years, but I don't think it's the right fit. It might be a monthly, I'm not sure. All righty, all right. Pause that for a second. I'm gonna go jump over to here, check some questions over there. Joey, what's happening? I play the game of life. Okay. I have covered call HPQ, John. Should I consider dollar cost averaging? HPQ, Hewlett Packard. HPQ. All right, so you say you got Hewlett Packard at 29 and now it's at 26. When the hell did you buy it? All right, anyway, look at the high back in November. The low is in April, just like everything else. Your last 30 days. So 29 is way up here, and 26, 71, way down here. So this thing is bottom fishing. If I'm not giving you advice, but I'm just saying, if you're looking to dollar cost average, wait until it finds its bottom. Look, it's dropping, dropping, dropping. Okay, what's going to happen tomorrow, the next day, and the next day? It will find the bottom eventually. It's Hewlett Packard. It's been around for a while. Ain't going anywhere. Okay, and it's on my list, just in case you're wondering. So wait till you find the bottom first. Wait for it to turn around, then think about jumping in. Okay? Do you spend all your money on Monday? I used to spend 95% of my money on Mondays. Now it's more like 75%, just because of TDS. Okay, people who have Trump derangement syndrome. That when that idiot says something stupid and the stock market drops like a rock, I don't get another margin call. Okay, back in April, remember I told you TDS day, second week of April? Yeah, I got, I think, 3 margin calls, which means I had to pony up some money or I had to do something creative. I didn't have to pony up any money. I did something creative, so I didn't have to put more money in. That being said, so John, I can't really tell you what to do, but if it was me, I'd wait to find the bottom first before I did some dollar cost averaging. But as she's dropping, me personally, I'd sell like the 27s or 27 and a halves. That way you have some money coming in. And if that's uncomfortable, sell the 28s. What are we looking at anyway? Okay, the 27.5 is going for 11 cents per share. Not 1%, but it's a little bit more, it's a little bit less than 0.5%, but it's more than 1/4%. So it's like 3/8. You still have money coming in. So it's $11 per contract. So if you get 5 contracts, it's $55. If you got 100 contracts, well, it's $110. But, you have to decide what's right for you. Okay, so let's go on over to here. Hey, boo to you too. John Warner, how are you today? What else we have? Scarnia Edits. Yo, how much money would you recommend I start with? None. I suggest everybody starts with paper trading. It's free. You don't have to pay anything for paper trading. Learn the strategies, learn the techniques, learn the new language. When you're ready to put money in, you will know. Because it doesn't take a genius to figure out if you're getting 1% every single week, that's 50% per year. Whether you start it with 5,000, 10,000, 20,000, 100,000, 500,000, whatever, the money has to go somewhere. So whatever you think, okay, you got 2 choices when you get to retirement. 2, that's it. Do it yourself or give it to someone else. But your money, it's either going to a 401k, an IRA, some kind of money market fund. It's going somewhere. Okay, so that's one of the first things you learn when you get a job. You got to save for a rainy day. Well, where's that money going? Where's it sitting? Is it sitting in the bank? Is it sitting in a CD? Is it sitting in a annuity? Where's it sitting? It's sitting somewhere. So either do it yourself or continue to let someone else do it for you. But I'm pretty sure nobody has more interest in your money than you. Holy cow, we're at 10:16, which means we got 45 minutes left. Let me get some of these questions. We're going to take a look at some stocks, and then we'll just keep on going. Dev, how are you today? I found you again. Lionel, I'm here every night, dude. What about Tesla? Ooh, Lionel wants to take a look at Tesla. TSLA. Now, Tesla, I don't do a lot of at the moment, and I sure as shit ain't going to do any now. Look at this. Get your bottom here. Okay. A couple of months ago, we're below 300. Now we're over 440. Okay. 300 to 440 is a $144 increase. Well, that's over 30%. So I ain't buying it right there. I'll wait for a decent pullback and jump in. Look, up, down, up, down, up, down, up, down, up. Now it's coming back down again. It's going to. So I'll just sit and bide my time. When she comes back down again, yeah. Sam, how do you mirror? I don't know. Also, your screen needs to get mirrored. We can't see it correctly. Sam, you are 100% correct. And Sam, you are not the only person to point this out. I thank you for pointing it out because I never saw it before. However, unless you have an answer to the problem, pointing it out is not going to help. Yeah, I realize it needs to be mirrored. Nobody has told me yet how to mirror the image on YouTube. Or, what's this one again? I'm broadcasting on Twitter. So I know how to invert either one of them. Okay, so unfortunately, that's the way it is. The broadcaster option. Broadcaster option. Okay. Now, I'm going to play along with you just for a little bit, Sam. Okay. On the right side of my screen on YouTube, I have the little reversal thingy, which means it goes from the front camera to the back camera. The back camera, you're looking at the curtains in the bedroom. I mean, the curtains in the room. Okay. The next little icon is the microphone. Well, if I did the microphone, you wouldn't hear anything. That doesn't do anything. The next is a wand. I have no idea what that does. Next is the clicker thing that stops and starts. Underneath that is the camera. Okay, and underneath that, what do we have? Ooh, shading, whatever. But if I click on the camera, okay, it shuts the camera off. That's all that does. Okay, put the camera back on. There we go. So this one right here, I click on that one. A 49-second short was uploaded. Holy cow. That created and uploaded a short. Nothing there on the screen in front of me allows me to invert or mirror the screen. Sorry, you got to deal with it or go to TikTok because TikTok allows me to marry. So everything looks normal, people on TikTok. All right, Sam, unless you know specifically how to do it, what you're saying, I have no idea what the broadcasting option is. Do you only watch the market or do you buy them? Okay, Rosin's dad. I'm not 100% sure what you mean by that, okay? I trade 7 accounts at the moment. Let me see if I get this right this time. 7 accounts, okay? Now, each and every one I buy and sell, buy and sell, buy and sell every single day. But most of my buying is on Monday. I don't do very much buying on Tuesday, Wednesday, Thursday, or Friday. Because on Tuesday, Wednesday, Thursday, Friday, I just take a look and see what it's doing. That's all. Okay, Dylan, SYM. What the hell's SYM? Never heard of it. SYM. Interesting. Interesting. Symbiotic Inc. What the hell do they do? And why have I never heard of them? Let's find it out this way. Let's go to Yahoo Finance, put in SYM, and see, do they have dividends and are they increasing consistently? No dividends. You see this right here? Dividends, nothing. EX dividend date, nothing. So no, that's probably why I never heard of it. Sorry. IREN already looked at that one. Dylan, great premiums, financials look good. Yeah, but unfortunately, Dylan, they have no dividends. So without the dividends, I can't put it into the calendar to find out when does it normally move. See, the reasons why I like dividend stocks is 1, they're profitable. 2, they share their profits. So worst case scenario, if I get stuck with a stock, well, it's giving me a higher dividend year after year after year. Okay, but it's giving me a dividend. And a dividend allows me to put it into a calendar to see when they pay the dividend. Because each quarter has 66 trading days, 13 weeks. So how do I decide when to buy it? I buy it specifically directed to the dividend itself because just before the dividend, stock has a tendency to go up. That's why I use the dividend. All right, so enough here. We're going to go to the next page. So hopefully, Gabriel, answer your question. Oh, wow, I got a lot of questions here. Okay. Alex wants to take a look at UNG. Alex, what is UNG? UNG. U.S. natural gas. Interesting. UNG. I'm going to go take a look at Yahoo Finance because I have no idea who UNG is. It says no dividends at all. But take a look at this. Look what the yield is for UNG. 0%. Year-to-date profit and loss, -25. Hell no. Dude, did you even check these numbers out yourself before you asking me? -25.8% this year? Yeah, no. No to UNG. Who came up with that one? Oh, Alex. Sorry, Alex. Alex NBA, not Alex Rodriguez. So there's 2 Alexes there. Max and Wally, how you doing? Emeris wants to take a look at PayPal. Now, PayPal doesn't have any dividends, so I've never bought it. PYPL. But I'll look at it for you. Okay. The high, 94, the low, 55. That's like a 45% drop, top to bottom. Look at where we are right now. Does that make sense to buy that now? I don't think so. Okay, if this is the bottom right there, we only have 1 day to the upside, and this thing doesn't have any dividends. Okay, Emeris. Milo, Robert, Yogi. Joshua, Horseman, Chris. How you doing, Chris? Oh, it's a fund. Yeah, no, I don't do funds. APIC. All right, not even talk to him. Ambrol. How you doing, Ambrol? See, Heidi, good afternoon. Heidi, Emrys has weekly dividends. PayPal's weekly dividends? No, PayPal doesn't have any dividends. PYPL, PayPal. Okay, let's find out. I don't think they have any dividends at all. Okay, historical data. Okay, dividends only. Come on. Dividends only. Oh, look at that. PayPal. There are no dividends on PayPal. So, no, they don't have weekly dividends. They have weekly options, but no weekly dividends. What's your thoughts on JP Morgan? We already did that one. Weekly options, I mean, yeah, okay, you correct yourself. How do you put into a calendar? Oh, Hayes, you're new here. The calendar is on Think or Swim. Okay, now you can find any calendar you want. Go to Google, EX Dividend Calendar, and then you do a search. There's a whole bunch there. But the EX Dividend Calendar for Think or Swim, well, you put them in over here on the watch list. Okay, over there on the watch list. See the watch list? Okay, right over there. You add it to the watch list, or you create a new watch list, and then that puts it into the calendar. User, how many business days prior to expiration do you buy the stock and sell the call? 2 weeks. Big Brain for the win. ENB, Big Brain. Oh, never fails. Every week he shows up. ENB. ENB. Okay, see, Big Brain likes Enbridge. I don't like Enbridge because Enbridge has monthly options. So I can only do an option trade once a month on Enbridge. So no, I don't like it. But he likes to come on every week and remind me how well he's doing on it. And that's good. I'm glad you're doing well, Enbridge. That's awesome. And thanks for your one of these days you'll actually contribute something other than Enbridge. Zane wants my opinion on QQQI again. Remember I told you at the beginning there's going to be someone who's going to ask me about something that's not profitable? Well, PayPal is no dividends. That's a no. What else? There was something else. QQQI. QQQI. Okay, so we're going to look at the history of QQQI, okay, dividends only. Now, we want to take a look at every single dividend that QQQI has dished out. All right, so it goes maximum, maximum, all of them. I want to see all of them. That's it. February 2024. Okay, Zane, do you see this here? February 2024 is the first dividend that QQQI has dished out. Dude, that's not even a year yet. Well, actually, it is a year. It is a year and a few months. Here, look at the numbers. 59 to 60, good. 60 to 58, not so good. 58 to 61, okay. 61 to 62, okay. 62 to 61, not so good. Okay, so 61 to 64, okay. 64 to 60, not so good. 60 to 61, okay. 62, okay. 62, okay. 61, not okay. 58, not okay. 53, oh hell no. Okay, did you even look at these numbers? I mean, seriously, you're putting your hard-earned numbers into an entity, QQQI, and it's not consistently profitable. And it's not even been around for 2 years yet. Okay, so some of you know what I'm thinking, so I'm not going to say it. All right. Oh, ROO6K. How are you today? Nate wants to take a look at Intel INTC. INTC. Now, I do have some Intel, and hell no. Come on, dude. Didn't you look at this at first? Look at that. Okay. She was at 24. She jumps up to 36. That's 12 bucks. That's a 50% increase in a week and a half. Okay, do you think it continue to go up? It can. A 50% increase from here to here. And you think it's going to keep going? No. Don't get me wrong. I have some Intel. Okay. And I pushed out my options a couple of weeks out because I think this is going to pull back and I'll keep on to my Intel. Okay, Nate. Thank you there, Nate. Gabriel, any thoughts on OPINL? What the hell is that? OPINL. Office Properties In. No options, no thank you. Who's that one? Gabriel. Sorry, no, Gabriel. Peaceman 49. What is this? I'm curious where you see Tempest AI. You got to give me the ticker symbol, dude. Okay, Tempest AI doesn't mean anything to me. USA Farm Style Life. Dividends on Tuesday. Okay. What do I think on OPINL? I already said that one. It's a hell no. No dividend. I mean, sorry, no options. No thank you. Peaceman. Okay. Tempest AI. I hear what you're saying. I really honestly do. Okay. It's right there. Big, huge words. Tempest AI. Great. What's the ticker symbol? Okay. I've never heard of it, which means it probably doesn't have 20 years of increased profits. And it's an AI stock, which means it's probably not 20 years old yet. So as great as you may think it is, for me, it's going to be a no. Because AI stocks, no. Only because they haven't been around long enough. Okay, Gabriel, again, what are your thoughts on OPINL? No, for the third time. Do you think it will grow? What do you think about the dividends? Well, number one, it's an automatic no, because I could care less about the dividends if it has no options. If I can't trade and make money on a weekly basis, it's an automatic no. For me, if you like it, more power to you. I hope it does good for you. I do. Okay, but look where it is. It made a bottom last Tuesday. So here's your bottom on Tuesday. Wednesday's higher, Thursday's higher, and Friday's higher. So she did find the bottom for the year right there. Now, if you're going to make money in the stock market, you can make most of your money buying low, selling high. And you can't get any lower than the low of the year, which was Tuesday. Okay, what are your thoughts? We already did that one. Okay. Gabriel, I did that one already. Gabriel, I did that one. What happens when the stock, like Wolf, no longer offers options? Do options come and go? Not really. Now, if a company has options, great. Well, if they take away their options, I don't want to look at them. But Wolf, WOLF, okay, why am I looking at this thing? This thing was less than $1 a couple of months ago. And then she shoots up to 350. Now, if it's less than $1 a couple of months ago, I'm having a difficult time comprehending that this thing has 20 years of increased profits if it's less than $1 a couple of months ago. And Gabriel, okay, Gabriel Klein. I said earlier during the night, I'm live streaming on 9 different channels, which means I have a whole bunch of screens in front of me with a whole bunch of questions. And I ask very kindly, if you're going to ask a question, ask it once, I will get to it as best I possibly can. Okay? You ask the same question 6 times. And each time is going to be a no because it just doesn't fit. No matter how good you think it may be, For you, it's great. You like it, you buy it. You asked me, I took a look at it. It's a no. No options, no thank you. No dividends, no thank you. I'm very particular on what I buy. Okay, I want to make sure the company's profitable. Well, if it's profitable, great. If it has dividends, great. Can I trade it and make money every week without having to sit in front of my computer? Without any options? No, I can't. I have no desire to sit in front of my computer every day. All right? Next question. What are your thoughts? Oh my God. What are, okay, that's 7, 8 times. You asked the same question 8 times. Mandy, how are you? User 56132, whatever. Oh, thank you for that. Thank you. Alex, NBA, now yes. Okay, I'm not quite sure what that means. Your residence. Hey, 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 Hakuna Matata's in the house. Uh-oh. Now, I didn't think guys got hot flashes, but I was comfortable a minute ago. Now I'm hot. I got to turn the fan on. What the hell is that? Okay, J Brand, UNH. What the heck? UNH, UNH. I don't think Lowe's going to cut it. I'm going to need it. I need it on medium. Whew. Hot. What the hell is that? A hot flash? All right, UNH. A year ago, we're up at 650. We dropped down to below 230. Now we shot back up at 344. Now at 344, well, it's been going sideways for the last couple of weeks. See, right there. Your bottom way over there, 230, jumps up 360, drops back. Now we're at 344. Well, you get 2 days to the downside. Do you see that right there? 2 days down. So no, not this week. Oh, Bam at Mac. Uh-oh, he wants to take a look at Harley Davidson and Advanced Auto Parts. Well, let's check it out. Harley Davidson. Oh, interesting. Now I'm going to get up for Harley Davidson because we got, it's 20 of. So let's take a look at some more stocks. And then we'll, at quarter of, we'll finish up with some more questions. Fair enough? All right, Harley Davidson. High, low, where was it? Where is it? Down, up, down. What's going on here? 28.82. Well, 28.82, we'll be looking at the 30. No, the 29. 29 is going for 50 cents. Well, that's over 1%. Let's take a gander. A year ago, 39.25. Bottomed out, TDS, right there, first week of April, 20.47. Okay, last 30 days. What do you think? Last 30 days. High, low, where was it? Where is it? Up, down, up. Well, could this be the bottom right there? It could be. I'm going to write Harley Davidson down. Okay. So let's take Harley Davidson at 29, see what it looks like. All right there. One contract, Harley Davidson. Buy one covered call, Harley Davidson. 100, which is the weeklies, 3 October. We know that. Harley Davidson at the market to open, blah, blah, blah. Here's the profit, 70.50. Here's the investment, 2,800. Think about it. Think about it as if it was a vending machine. Okay, a vending machine, we get these little tiny motorcycles every time we put some money in. Put some money in, got a little tiny Harley Davidson motorcycle. That's cool, vending machine. Think of it that way. I'm paying $2,800 for a vending machine of Harley Davidson. Well, this week, it's giving me $70.50. Next week, it might be $60. The week after, it might be $80. The week after that, it might be back to $73. Whatever. It is a consistent weekly cash flow entity or asset, weekly cash producing asset. That's the way I want to look at it, because every single stock I own, I get a cash flow from it every single week. Everyone. Anyway, so Harley Davidson, let's take a gander. 70.55 is going to cost 2,800. Calculator, come out, wherever you are. 70.50 divide $2,830 gives me a grand total of 2.49. I'm writing that one down for tomorrow. 2.49. Now, you got to remember, very, very important, does it make sense? Do I like Harley Davidson? Well, if I buy it tomorrow at $28.82 and I sell somebody the rights to buy it from me at $29, does that make sense? Well, now I have to wait for the stock to go up in price because they don't have a $28.50, and even if they did, $28.82 is much closer to $29 than anything else. So here's the conundrum. Well, I like Harley Davidson. Okay, I bought them last year and the year before because when it looks good, okay, it makes sense. All right, so if I buy it tomorrow, $28.82, and I sell somebody the rights at $29, I'm bringing in $2.5% for 1 week. Now, what happens if it doesn't hit 29 by Friday? No big deal. I let that option expire worthless, and then next Monday, not tomorrow, but next Monday, the 10th, I will write another covered call at the exact same price I just paid for it, 29. And I will keep doing that until it hits my target. Yeah, that's basically it, until it hits my target. Because I'm not selling at a loss, just, plain and simple. All right, so let's get rid of all this. Let's get rid of that. Let's get back to this, and let's go back to here. All right. Next, what do we have next? Oh, Bama wants to take a look at Advanced Auto Parts, which, by the way, I do have some Advanced Auto Parts. Interesting. Same thing. High, low, where was it? Where is it? Up, down, up, down, up, down, up. So it's going up right here, see? Going up at this moment. Let's zoom on in. Is that 30 days? I can't see that far. You would think it's a 60-inch screen. Now, it might be bigger. It might be a 70-inch screen. I don't know. But it's 5 feet away. And I still have to put the damn glasses on. Getting old sucks. Years ago, I wouldn't need glasses, but now I do. Oh, Wonde. Is that right? Wonde, W-O-N-D-E. No one can consistently make money. Okay, thank you. What happens when the stock, like Wolf, no longer offers options? I don't buy it. It's actually that simple. But I do appreciate that. Who said that one? Wonde. Who the heck is Wonde? And why does he think we can't consistently make money all the time? Got it. What is your list? Dividend Kings, Dividend Aristocrats. Okay. So JR and XRP wants to know what the list is. Well, do you have a crayon, mascara, makeup, lipstick, pencil, paper, pen? What do you got? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Those 5 lists right there will give you over 300 different companies. Wonde. Is that right, Wonde? Did I say that right? No one can consistently make money. All right, thank you for that. USA Farm Style Life, Pfizer and Merck. What is Pfizer? PFE. What do you think? Pfizer. Looking for the new bottom right there. 23.76 to 24 is going for 17. I'm going to say no. Sorry, the numbers just don't work. What am I buying it for? 23.76. What's the closest strike price at 23.76? 24. Well, the 24 is going for 17 cents. As much as I like Pfizer, no. Doesn't hit the money. It doesn't give me what I want. There are too many other companies that are giving me over 1%. Why would I do Pfizer? Just because it's finding a bottom, turning around, going back up, well, that's one thing. Well, now I got to buy the stock and wait for it to move before I make money? No, sorry, I don't do that. I like simple, safe, predictable, consistent. Set it, forget it, walk away, and I'll be fine. That's what I want. Okay. Lise, Lyse, cool name. And Wandy, you what? Nobody can make money consistently. Not once, but I've seen it 5 times. So you said it once. What point are you trying to get? Seriously. Now, for the fun of it, we haven't done this for a while, but Wandy needs to see this for some strange reason. Okay, now, Mr. Wandy, just in case you're wondering, this is my website right here, The10MinuteTrader.com. You can do your research on it. It's been a live, active website for over almost 20 years, 15 years. I think it's been definitely over 15 years. Okay, fine. All right, so go to the little hamburger right over here, top corner. And right there, weekly trades, 2025. Those are trades this year. All right, so what I'm going to do, Mr. Wandy, just in case, just in case. Let's go all the way down here. There we go. All right, right there. Mr. Wandy, do you see this right here behind me? This right here says week 1, quarter 1, okay? December 30th, January 3rd. That's this year. Okay, this is account number 1, account number 2, account number 3. Okay, I brought them over from last year, and I trade every single week. Every Monday, Tuesday, Wednesday, Thursday, I am online with, I got a morning trading group. It is a paid trading group, and no, I'm not trying to sell you anything. But for those who want to follow along and see exactly what I'm doing, fine. They pay a small amount of money, and they get to watch over my shoulders, and they can ask me any questions they want. I trade these 3 accounts live so people can actually see them. You can click on any single one of them. Clicky, clicky, there you go. Everything is time-stamped right here. Time-stamps. What it is, how many, what it was. We got Riley, Intel, Harley-Davidson, Altria, Intel, MPW, US Steel. Strike prices, the price, and the profits. They're all right there. You can check yourself. You can. Every single trade I've done so far in these 3 accounts is available for you to take a look at. Mr. Wandy, I have no idea if that's how you pronounce it, but it is what it is, okay? Well, okay, here we go. Week 1, 4.2, 1.8, 6.1. Week 2, 2.3, 1.7, 1.8. Week 3, 1.8, 3.6, 4.8. Week 4, 2.3, 2.2, 3.3. I could do this all night long. But you're right. Nobody makes money always. Now, I've lost 4 trades this year. Okay, this is 3 accounts. You can count how many of these little suckers there are. There's quite a bit of them. Okay, there's a lot of them. Okay, I must have done at least 1,500 trades this year. 1,500. I lost on 4 of them. So yeah, you are 100% correct. 4 losses out of 1,500. Terribly sorry, I can't be perfect like you. Okay, but no one can make it consistently. No, you're absolutely right. I lost 4 times this year. Not that I was counting, but hey, they are. Okay, ARVN. I have no idea what the hell that is. ARVN. Hell no. Who came up with that one? Mocha Luna. Mocha Luna. October, November, December, January. I don't do monthlies. The numbers just don't work for me. You like monthlies, have at it. More power to you. I don't do them because the numbers don't work and they're difficult. Mocha Luna, AMC, has strong options. AMC. Now, I'm having a bit of difficulty with AMC. Only because it's at $2.89. Okay, so $2.89. The $3, which is the closest one, is going to pay 5 cents. Now, 5 cents is over 1% on a $3 stock. Okay. Well, let's see how many dividends, and is this thing increasing on their dividend payments for it to be viable? Let's get out of that. AMC. All right, so we're going to check out AMC. And imagine my surprise, there are no dividends. Now, don't get me wrong, it doesn't mean AMC's a no for you guys. It's a no for me, because no dividends doesn't allow me to look at the calendar to find out when do they normally move. So how do I find out how to trade this successfully without the dividend telling me when the stock is going to move? That's why I use the dividend, because it tells me, hey, this company's paying the dividend on the 5th. Well, great. If they're paying the dividend on the 5th, the stock goes up just before. Well, then fine. I'm going to buy it 2 weeks before the 5th, because then I want to be in line as the stock slowly goes up. And as it goes up, I want to get up. I'm only looking for the 1%. 1% shouldn't be that difficult. Shouldn't be. Next, Alvaro Reich Tech Robotics, RR. While we're here on Yahoo Finance, we might as well look at Reich Tech Robotics. Imagine that. Unless you know another way to be able to find out exactly when a stock moves historically, consistently, over and over and over again, it's just going to be a no. Because unless I have that edge, because I got over 300 companies that I'm looking at that do fit. Why would I put a company that doesn't fit? Okay? All right, next. Next. XRP, give a good example. A good example. Macy's, US Steel, IBM, AT&T, Home Depot, Lowe's. Oh, what is that? That was cool. There's over 300 companies that actually fit what I want to do. Oh, of one you like. Oh, of one I like. Oh, you mean like Harley Davidson, Boeing, Nucor, and Siri? Those are 4 we looked at this evening. My 1-year anniversary is today. I turned 10,000 into 60,000. Thanks. I owe you a beer. Awesome, dude. That's great. Good to hear it. Kenny, PA. What the heck is PA? So what I say to that one, who? I want you to call you who. I'm not going to do that other word. But, I'm glad. I'm glad for you. Now, I'm kind of curious, though. Okay? Now, when you say this is your 1-year anniversary, is that your 1-year anniversary trading with me? If so, that's a 60% increase. That's pretty damn good. Or is it your anniversary to your wife or your husband? Because I have no idea if you're a girl or a guy, because that name right there is kind of universal for anyone. PA is not coming up, so that's going to be a no. Okay, so Life Wonders, AVB. What is that? AVB. AVB. No. Okay, so who said that one? Life Wonders. Okay, Life Wonders. I don't do monthlies only because I can only trade it once a month. Okay, so invite to start level up blast. I have no idea what that means. None. Something just popped up my screen. TikTok wants me to do something. I have no clue what that means. So anyway, Life Wonders. I don't know very much about that company, but I don't invest in companies that have monthly options. Only because, not that it's a good company or bad company, it has nothing to do with it whatsoever. A monthly option, I can only trade it once. And if I'm making 1 or 2% every single trade, well, 1 or 2% every month is only 12 to 24% for the year. Okay, but 1 to 2% per trade every week is 50 to 100% every year. So I just don't do monthlies because the numbers don't work. And to make matters worse, okay, this is 90 days. Is 30 days. So here we are, 9/28. 828. That is 30 days. Great. Now tell me where it's going to be in another 30 days. See, look at it right here. 192, shoots up to 196, drops down to 188, shoots up to 197, drops to 192, shoots to 198, drops to 191. Now it's at 195. Great. Where's it going to be in 30 days? That is why I don't like monthly options, because you can only trade them once a month. Well, once a month means I'm not getting a paycheck every single week. So I don't do monthlies. No matter how many times I say it, and it says right up the top, weekly options. It should say weekly options only. Okay, but no, I don't do them. Mike Sweeney, aren't the dividends for the funds just whatever stocks they choose at that particular time? Are you talking about ETF funds, electronically traded funds? See, Mike, that question is not as, I'm trying to think of the right word. Cause it's not specific enough. It's like, I don't know what it is you're trying to say. Aren't the dividends for the funds just whatever the stocks they choose at that particular time? Not 100% what you mean. Not 100% sure what you mean by that. But it's a good question, though. I still like PayPal for your weekly option method. To me, the chart is chopping sideways and up bias. I don't know about you, but the last couple of months, this is definitely going down. It's definitely, look, this is going down too. Okay? Down, up, down, up, down, up, down, 1 day up. That's it, just 1 day up. That's it. That's PayPal. If you like it, great, no problem. I don't do it because I don't want to sit in front of my computer all day looking at this stupid thing. That's one. I mean, it has options, great. What are the options? 67, this 67 is going for 120. That's not bad. It's just a little bit less than 2%. Well, if you like PayPal, great. I don't like it because it doesn't have dividends. Because absolute worst case scenario, what am I collecting? Nothing. Okay, one of the reasons I like dividend stocks, worst case scenario, I'm getting a higher dividend every single year. And I'm able to do a covered call on it every single week. Well, without the dividend, it's hard to judge when it's going to move. And part of a dividend strategy that I use is I know when the stock is paying its dividend, and it usually goes up in value or up in price just before the dividend date. That's why I use the dividends. It shows me when the stock usually goes up. Well, knowing when a stock's going to move, that's half the battle. Well, knowing that and coupling it with a simple, easy strategy. Holy shit, we got 2 minutes left. A simple, easy strategy. Well, hell yeah, that just makes sense to me. Anyway, questions. No more stocks. Tomorrow's another day. We'll do the exact same thing I'm in tomorrow. Collie, EDN tomorrow. Done. Oh, Eric, Texas Instruments, TXN. Ooh, check that out, Eric. Right there. Nice. 184.55. The 185s are going for 253. Yeah, buddy. We'll take a look at that one tomorrow morning. I'm going to write that one down. TXN. TXN. And a little asterisk next to it. All right. So BDC. No name there. Right, guy. How's it going? Isabel, how are you today? Okay. USA Fine Style. We already looked at Pfizer. The numbers didn't look good. Even though the chart looked good, the numbers didn't look good. What software are you using? Elbimar, is that right? That is called Think or Swim, and it's through Charles Schwab. Right, guy, we already looked at Tesla. Is that Think or Swim? Yes, it is. Castleman, hello, everyone. What's good for dinner? I think I had tuna tonight on salad. Castleman, thank you. Superlative. Would you short it, JPM? I don't short stocks purposely. Sometimes they just happen. Red, blue, green, black. AEM. I'll have to take a look at tomorrow. Castleman, thank you. Yep, it is TOS. Thank you, thank you, thank you. Tomorrow. Who's that one? Breno 501 XRP. Sorry, I don't do crypto. RSU or Options Oracle. Okay, user 92,167. We'll take a look at that tomorrow. Daisy, how are you? Sherry, how are you? James, what's up, brother? Okay, USA Farm Style, like I said, please only put it in there once. You asked me about Pfizer like 5 times. It's not going to change from the first time you ask to the 5th time you ask. Okay, Bryce, yes, that is Thinkorswim. Okay, red, blue, green, we already did that one. Edward Garduno. Cool. Mine's Gardino. It's almost the same. Okay, I get a U and an I, and you get an R and a U. Cool beans. Eaton, E-T-O-N. Ooh, I like Eaton. I do. Take a look at it tomorrow. Jen Pika, is the 1% just from the premium or plus the upside of the strike price? No. Jen Pika, the 1% is just the premium alone. Boomer, do you do one-on-ones? Absolutely. Send me a DM with your number. I'll give you a buzz. Or go to the website and just schedule a call. That's something new. I actually have that new calendar thing. So I've never had a calendar to keep me on track. The weirdest thing. People just send me the numbers and I call you whenever I feel like it. But now there's a calendar where I'm supposed to call people at certain times. Oh. It can go either way. Benedict 100, how are you doing today? Is it reverse? I don't think so. Can you explain equilibrium? Yep, I can. SYM has negative earnings. Well, then why the hell would we want to look at it? DeFi Technologies is okay to put money in. Okay, Will Knox, I don't really know. I mean, we'll have to look at it tomorrow because we're running late. ZS, okay. Interesting. Odom, what's happening? 1% is 1%. Does not matter. You're absolutely correct. Just Serena Jordan. How are you, Miss Serena Jordan? Lloyd, how's it going, Mr. Lloyd? Jen Pika, so he's counting on both to make the 1%. No, I'm not counting on both. Just the 1% is from the premium only. Okay, the difference between the purchase price and the strike price, that's an added bonus. Okay, it's not something I'm counting on, but okay. Do you only trade shares? Yep. Ren is Bitcoin related. I avoid Bitcoin. Can you look at Target? We already looked at Target. They are increasing revenue by like 30 to 50% per quarter. Okay, Dylan. I'm not seeing the screen. David, not quite sure what you mean by that. NZD USD, that is a Forex. Yeah, I don't do that. Blaine, how are you? Miguel, tomorrow we already looked at FCX. Blaine, PBR, is that peanut butter and raspberry? Ooh, Mara. Okay, I actually have some Mara. I do. eBay, ooh, nice. We'll take a look at that, Mitchell, tomorrow. Jen Pinker, so he would go with a 0.5% premium, with the other half coming get the strike price. No, not at all. If it doesn't give me 1% right off the bat, it's going to be a no. Sorry. I believe he's just wanting the 1% per week. I don't matter how. Yeah, that's true too. Calendly. I got another conversation. Who with tomorrow? Alan. All right, Alan, okay. Alan, I'll give you a buzz tomorrow. Kitty Cat, how are you today? New here. What platform are we on? Mama P, what's going on? Mama P, the platform behind me is called Think or Swim, and it is available through Charles Schwab. Alan. Wait a minute, Alan, didn't you just ask that one? All right, so Alan, that's another Alan. Okay. A low battery. A low battery. All right, so let's play Swappy Change it with these. Put this one right here. I got to get me some more cords. Okay, that one goes there. this one, unplug there and plug in right here. Here we go. Cool, now it's charging. Alrighty, National Fuel, NSE, NFG. Ooh, I like that one. Lori, Ford, we'll take a look at that one later. People taking profits, of course. This ain't anything, Todd. No, it's not. DPZ, how are you today? Did you do Hertz? Not yet. Is it only 1 year, Tempest? Could be. What do options mean? Uh-oh. Digi replicate. What do options mean? Oh, here you go. Are you ready? Would you prefer a coffee cup or a thermos cup? Insulated, not insulated. That's an option. You get this one or that one. That's what an option is. But when you're talking about a stock option, you're giving somebody the right to buy something at a certain price by a certain date. Not the obligation. So you can do it if you want. That is a call option. A put option is totally different, and I don't teach put options here. James, your website is The10MinuteTrader. Pedro, top left corner of the screen you're on. You're on TikTok, top left corner. Click on there. There's a link right to the website. Now, I try not to sell anything, so I'm not going to try to sell anything. If you want to buy something, go to the website. No weekly options, thank you. Sir Knight Kyle, having a hard time finding a free paper trading site. Can you help? Yeah, Think or Swim. TOS, Think or Swim. So go to thinkorswim.com. You download it onto your computer. You don't want to use the online version. You don't want, this is just my personal preference. I don't use the online version and I don't use the mobile version. I use the version that's downloaded onto my computer because it has better perks. Okay, and it's free to use for, I think they'll let you use it for a month or two without charging you anything. Okay, but it's through Charles Schwab. Okay, that's why I do most of my trading. I've been doing Charles Schwab for, well, since they got, and since they bought out TD Ameritrade. Common Dev, I have no idea what that means. Iron is increasing. Yep, all right, you saw that one. I don't really care. Think or Swim, paper trading. Can you explain how you make an option call? Brian, how are you today? First and foremost, Brian, you have to be approved for option trading, which means there's a book called, I don't know, Standardized Rules and Regulations. Oh, wait a minute. Characteristic Risks of Standardized Options. I think that's what it is. Hey, Matthew, another, oh my God, how many people do I got to call? Anyway, so what happens with UNH? It dropped, it went back up again, and it dropped again. Laurie, Coca-Cola. I think I may have bought Coca-Cola twice in 20 years. Don't get me wrong, Coca-Cola is a great company, and they consistently increase their dividends for more than 5 decades. But the premiums really aren't that good. What does that mean? Diana on the way. No, Diana, I'm terribly sorry, but I don't see any other questions that come before what does that mean. Is that Rich Bruner? Charles Schwab, Think or Swim. Mr. Bruner, how are you this evening? I want to fly to, I want to go to Las Vegas, specifically to drive your wife's new Porsche. That's the only reason I want to go. I mean, come on. I helped her get it, so I think I deserve a ticket for a ride. Anyway, do you get leverage on stock shares? Yes, you do, depending on who you are, what you got available, blah, blah, blah. What is the name of the Market N? Which app is that? That's not an app. That is a trading platform called Think or Swim. Okay. Can you analyze Target? We analyzed Target a little earlier today. When the dividend is good, like Harley, would you consider holding long? Oh, hell no. Okay, Andy, Anita. I'm a little bit different than everyone else. Some people like to buy stocks just to collect the dividends. Well, here's the thing. The dividend is only paid once every 90 days. So think about that for a second. If it's a good company, which Harley-Davidson is, in my humble opinion, if I bought just the stock and got a covered call every single week, the covered call, or the premium for the covered call, is usually higher than the dividend. And if the dividend's only once every 90 days, do you realize 90 days is 13 weeks? 13 weeks. And if I'm getting 1% every single week, 13 weeks, that's 13%. Well, that's a lot better than just a dividend, don't you think? But it's always going to be a numbers game. Okay, buy it. What I do is I buy it and I take a look at what is the closest strike price. Does it make sense? Is it going the right way? Okay, you guys are relatively new here. Don't do anything. Come back another day. Okay, watch over and over again. Ask what. It's great that you're asking questions. That's awesome. If that's the journey you and I'm assuming, boyfriend, girlfriend, husband, wife. I have no idea. Andy and Anita. Andy and Anita travels. I'm kind of curious. Do you guys have like a YouTube channel? So like you share your travels with? That'd be awesome. I'd love to chat with you if you do, because I'm going to be doing the same thing come January. For those of you, in case you're interested, it'll be The Adventures of Papa G, where I go and I travel all around. I like to do the Great American Loop, both by sea, by water, and then by RV. Okay, so the first part of the journey is going to start probably in the Florida area. We're going to buy a boat, and then we're going to go from one port to the next. So it's port, all the way up the East Coast, through the Great Lakes, down the Mississippi, blah, 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 and then back to Florida again. That takes about a year and a half. We're also going to do the RV. So it's going to be a nice size RV, a little bit bigger than I should have gotten, but still. And then we're going to do that next. Okay, so I'm not getting any younger, so I might as well do the difficult one first, which is the boat, and then do the RV. Because, if you break down in a boat, well, you're screwed. But I got something no one else got, so that's a little interesting. That ought to be fun. The RV, if you break down, you just make a phone call and call AAA. Hey, come pick me up. That type deal. So I'm kind of curious. Do you guys have a channel, and what is it? And if you want to chat, I love chatting to people. Anyway, DM me your number. We'll chat. Or go to the calendar, create a, what do you call it? Jagger Path. Never heard of it. 50% of the live goal is completed. Cool. Tay Picks. Cool. MZ Cristile. Good evening. Annual travels, no dividend, is just a SIA to make more money. Okay. Hank, CMG. Isn't CMG, don't tell me. CMG is Chipotle. ULTY. Sean, do yourself a favor, Sean. Before you put money into ULTY, go check. Now, this is not advice. This is not a tip. This is not anything. This is just my humble opinion. I don't do ULTY because I go take a look at the dividends and how profitable they are on a consistent basis, and how many years have they been in business. Mark, where does the company show when they give? I have no idea what that means, Mark. DJ, what's the annual return? For who, DJ? Jim Abucon? Okay. Thank you there, Mr. Jim. House of Ted. What a cool name. House of Ted. Welcome to the House of Ted. Gotta love it, Ted. Great work, mate. Thank you very much there, Mr. Jim. Sean, again, TEM. What is that? House of Ted. Okay, House of Ted, check with me tomorrow. Andy and Anita, ODMC, okay, travels, ULTY. Wow, you look all clean. Yeah, that's what happens when you take a shower. I went and played soccer this morning, okay? When I got out of the shower, my girlfriend says, why is there so much dirt in the shower? Because we play soccer in the dirt. Anyway. James, TQQQ. We'll take a look at it tomorrow. Odom, nice to see you. Activity, just another way to cover the purchase. Okay. HUH, ULTY, blah, blah, blah. Coca-Cola and Ford. Okay, Laurie, tomorrow. Nadia, good evening, Miss Nadia. Sean, again, dude, Sean, please. I can read perfectly fine. You saying ULTY over and over and over and over again is not going to help your case whatsoever. I stop the conversation and I look at each and every individual question. Okay? ULTY for me is a no, but if you like it, you do it. What I'm asking you politely, besides only posting once, is politely go take a look at their profitability. How consistently profitable are they? Mr. ODT, woohoo! Thank you. Where were we? Okay, BITX. Wesley, we'll take a look at that tomorrow. James, tomorrow. Web Pharaoh, dude, I have money to invest. I was trying to get your website to see if you have training courses. Web Pharaoh, top left corner of the screen, because you're on TikTok. Top left corner of the screen is a little picture of me, says dividend on it. Click on that, and that will take you to Dividend Stock Talk, and there'll be a little envelope. That's my email. Send me an email or sign up, or sign up for a phone call, and I'll give you a buzz. We can chat. It's not for everyone. It's boring. It's monotonous. Holy shit. 86, you just getting here, dude? It's 11:15. I love giving you a hard time, brother. I do. 11:15, brother. All right, so anyway, Web Pharaoh, you want to chat? Send me a number. I'll give you a buzz. And I promise you, I'm not going to try to sell you anything for those of you who do sign up for phone calls. Yep, Web Pharaoh, thank you for the hat and mustache. Latman, will government shutdown affect your strategy? Okay, Latman, let me ask you a question. Over the last 100 years, did we or did we not see World War I, World War II, Vietnam, Korea, what else? Afghanistan, Iran, Iraq, all that crap. Plus the Great Depression, stock market crash of 29, 87, 2000, 2001, 2008, 2021, 2025. Didn't we see all that crap? We did. We've seen all that crap over the last 100 years. What makes you think that just because the government is saving us money by closing the doors for a day, I think that's awesome. You know what would be great? Close the government down. Stop that freaking spending. That'd be awesome. Do you think I would care? No. But you know what? They would continue to sell and buy stocks consistently. HBC, cool beans. We'll take a look at it later. Traded for years, 1 year doing it. Your method. Oh, cool bean. Oh, I get 4 stars? Oh, man. Not 5. Oh, bummer. Is what it is. I'm glad you're doing good, brother. I really am. James, TQQ, will take a look at tomorrow and then sell. Absolutely. Yes, shut, blah, blah, blah. No, I'm late. I have no idea what that means. I'm trying to learn. Okay, keep coming. I'm here every night. Just keep coming back. Prithapal Tour, Nike. I like Nike. I actually own some Nike. BBC. We'll take a look at it tomorrow. Vatemon TV. How are you today? BMY, Bristol Myers Squibb, Johnny, love it. Sorry I'm late. Alrighty. It's okay that we started without you, right? Do you do one-on-ones? Yes, I do. Boomer, send me a text message or email, whatever. We'll chat. It's Ben. Ben said, woohoo. Hello, hello, hello. Bonjour, allo, salut. Konnichiwa. Moderator, 86. Thank you, James. Yep, froze. HI. Kenny, how are you? Seth Morse. Apologies for switching to subject. Okay. Didn't notice I did. Yeah, baby's in the house. Do you have a device that turns salty water into boat fuel? No, I don't. But that would be cool if you have it. But I do, what I'm going to have on the boat, if you're curious, I'm going to have what's called a rotoverter, if you know what that is. I'm also going to have another device that takes the electrolysis from the ocean and from the atmosphere, combine them two together to be able to feed into a capacitor at some certain point. If the capacitor reaches a certain voltage, it dumps it into the battery. So it's like free electricity. Well, that part, it's like so many different ways. But I'd be interested in take a look at that one. That'd be cool. When you do covered calls, that just disappeared. When you do covered calls, would you do anything strategically when the price goes up or down? All right, AP. I look at my positions every single day. Okay, I do most of my buying on Monday. Okay, on Tuesday we jump in. What we're looking at. What happened on Monday? Okay, what did I buy it for? What did I sell? What's it at now? Should I do anything about it? Tuesday's the same thing. Wednesday's the same thing. Thursday's the same thing. I jump in. First thing I want to see is what did I buy it for? Where's it? Okay, what did I sell? Where's it at now? Is there anything I should do? And go from there. It's always one step at a time. RGTX, Norberto. We'll take a look at it tomorrow. Wow, guys, holy cow, I'm still going. Guys, all these questions. Any mining companies on the list? Don't know. Lord No Face, how are you? Hertz, HTZ, good. Okay, 5 stars. Yay for me. Oh, that's it. We're done. We're done here. So we're done over there. Talk to you for now. Okay, ta-ta for now. Okay. Thank you there, Eric. Is that done? Done. Okay, Sura Lift is not 20 years old. I don't even know if they have dividends. Okay, over here. Aren't the dividends for funds that just whenever stocks? Okay, we already had that question. I still like PayPal for the weekly option method. Okay, to me, the chart is chopping up sideways and up buys. No, we already talked about that. But that's okay. What else do we have? Wait. SPHR, no idea who that is. Apollo Rocket of Love. Holy shit, that's a cool name. I'm the Rocket of Love. Hoo, yeah. All right, anyway. Tomorrow we'll take a look at it. Anthony J, how are you doing today? Gabriel, Wolf is dropping, but options have been great. This week, no options are even available. Is it normal? I honestly don't know. See, Wolf is one of those companies that I don't invest in, so I don't really pay attention to it. Now, as we said earlier today, there's 10,474 stocks. That's a lot. So if Wolf doesn't fit, it's going to be a no. Simple as that. Riley, DPZ. What is the DPZ? Demilitarized party zone. I have no idea. Super Steve, Pepsi tomorrow. Thoughts on Costco? Marcus, Costco's out of my price range. That's $900 a share, dude. That's my opinion. Oh, look at done. Done. All right. Okay, so last we have over here, Dylan, Dev, are you selling coals this week? Cool bean. Alejandro, you're saying patience is key. What's the time in New York right now? 11:22. Oh, you're too lazy to look it up. I like that voice. You're ready. Okay. I ran 6% premiums. Cool beans, dividend. Dylan, you have fun with that one. Hello. Is Finial a good option to join? Never heard of it, so I really couldn't tell you. Oh, I like Dev's report. Dev, high premiums can indicate a strong move in the future. I would be careful if I were you. I'm going to target 16 if I can. I'm getting a little worried about coals. We can take a look at coals tomorrow. My question keeps getting filtered for some odd reason. Well, superlative, because there's certain questions or certain words I don't want to have to deal with. So if you're asking about a stock that I don't like or that just doesn't fit, that's going to be filtered out. Okay? Some words, it is filtered, and it's filtered for a specific reason. You are a TA or FA trader. Okay. It's a covered call question. I got 11-cent dividend from Kohl's. Okay. Okay. Won't buy OM earnings ever again. All right. There's a free one. AA solid stock this week. Yep. Alrighty. Good morning. Good morning. Hello. Drive. Hit the road. Dylan, I will definitely check AA out. I love Elko. I do. Always love that one. Oh, you're from India. Awesome. What you trade now, the chart. Okay, so you are finally responding. Okay, you do know, who's that? Sakuna Yuji? Okay, I have a whole bunch in front of me. So I can sit here all night long and just answer questions. Or I can show you the stock and give you my opinion on stocks. You can't have it both ways because there's too many people for me to answer all the questions by myself. All right, so that being said, we're way past 11. I'm out here. I answered almost all the questions except for YouTube, only because I need to get me a moderator. I need me a moderator on YouTube so we can filter out some of the weird questions. All right, is your covered call expire worthless? You don't lose money, you just have to keep it. Well, what's wrong with that? Well, think of it this way. All right, hypothetically speaking, if I like Macy's and I buy Macy's, let's say it's at 13 bucks, and I want to collect a covered call on it, and I get a nice little premium every single week. Well, what happens if it hits my target and somebody buys it from me? I get all my money back and I get to keep the profits. And then when it comes back down, because that's all stocks do, they go up and they go down. So when it goes up, I'm collecting the premium as it's going up. When it gets to the top, and then she starts taking profit. Well, that's when I want to sell it, when it's at the top or getting close to the top and then coming back down again. Because once it comes back down again, hits that bottom, it will slowly turn around and go back up again. Well, I want to buy as it's going up, and I want to sell as it's still going up and almost get to the top. 1-2 RR, consistent base hits, or 1-6 RR, home run approach. Okay. I'm not 100% sure what that means. 1-2 RR. Is that rate of return, consistent base hits, or 1-6 RR, home run approach? I like consistent base hits, okay? Because you can swing for the fences every time. Yeah, every once in a while you'll hit it. But if you're just trying to get on first base, trying to get singles and doubles, well, that's a lot more predictable and that's a lot safer. Got it? Thanks. Good. Great. We're done. Done. And now the end is near, and so I face the final curtain. My friends, I'll say it clear. I'll state my case, for which I'm certain I've